Good morning, my friends, and welcome to the Breakfast Club. My name is Darren Hancock, and I'm your host today here on a Monday, the 18th of March, 2024. Welcome to the show. And looks like it was hit just exactly where we're looking for the weekend review, when we did the weekend review. Worked out nicely. So let's see if we are live. Stand by. Oh, it doesn't show we're live yet. There we are. Okay, we're finally up and running. Who's the first one in the door this morning? All right, so what we're going to do is we'll do my usual. I'll go through the charts this morning. I'll have to admit I did try to catch a few of these. We're looking for this imbalance here, this little gap over on the other side. I was thinking this would be a great place for a turn. Then I saw this happening here, so I got short here, got taken out there. Then I saw it here again, got short here, did not take it out of the rejection block, so got beat up my own rules, didn't follow my own rules, so didn't get the rejection block there. And then I went off of a CAM 1 model here and got taken out there as well. So I've moved to the sidelines, waiting for a better setup. Thomas, good morning. So I'm waiting for one of those clean kind of spike up, spike downs, or the 10 o'clock rush. So anyway, I'm looking. We'll talk about this one here. So we're expecting this downward move in ES this week, and boy did we ever get that. It opened and dropped right through that daily fair value gap that we're expecting and looking for lower prices. So this was quite the drop. So we are looking for this inversion, or this fair value gap down below us. Now that it's become inversion, we come back up in here tomorrow and continue to push down it for deeper prices. Look for this low today, perhaps the rejection block, and then see if we get a run back into this order block. I'd like to see like a little fair value gap form in here, so we can use that as leverage to get further downside. While we were talking about this getting back to this level, it literally hit it, and we've come all the way back through, and we're looking to run out lower levels. I suppose we're still inside this inversion here, or this fair value gap, reclaiming it over and over and over again, and we're still inside that. We're still supporting that right here. So we're in limbo with the Dow Jones there. Now we've got up on top of this fair value gap. We're looking to get back into here, and we have. So we're looking for either the higher price into here, or just drop back into this price imbalance, which we've got. So now it's upside into here, and then we're expecting a rollover. We'll see how we respond inside this fair value gap today. These old lows. This candle's low here, which is the top of the fair value gap. We'll see how we respond off of that and start to get back down into a lower range. If we get on top of this, get some leverage on it with further upside, which puts down pressure on all these foreign currencies. I am expecting another price leg down, so we're just waiting for confirmation. If we get into here, look for that swing pattern to occur, that you can get off of that to head down into these lower levels here. We're in a consolidation right now on the hourly. So considering this, we have down prices for the foreign currencies if we come up into here. Or we've already revisited this imbalance here and the top of this imbalance here. This seems to be the draw liquidity. So if we're expecting more downside prices, we're expecting another draw down into this small fair value gap here on the British pound. Now that we've got on the other side of this, it's become an inversion. We come back up, find some support at that, and continue on the downside for now. We're back into this daily fair value gap here. We've just cleared the bottom of it, and we're coming back inside one more time. So look for this mean threshold all the way back into that breaker again on the daily. We still have yet to finish off that last piece of that fair value gap here. It's not an inversion, it's actually called a fair value gap, because we're only coming through it for the first time, so it's not an inversion yet. And then look for this one down here. So in the premium level and a discount level of that big range right there. You pull your fib tool from top to bottom. There's 50%, so this is all premium. That little piece there is discount. So look for this to fill. And how far up you dig into this breaker, I'm not sure yet. I'd like to, as you see, this fair value gap provide a level of support before rolling over and getting back down into this level here. So back into the middle of the range. So now we've got the premium side just come back into here, and then I'll have to decide, because it'd be stuck between this candle here and this big candle here. This one's inside it, so we have a small swing. If we roll over and this now becomes the support candle, and we get below that, we're really between these two candles, so this is where things get smaller and smaller and start to compress. So you want to see this start continuing pushing up into this candle here, and then rolling, and you're still between these two big ones inside this larger range here. New Zealand dollars hit the rejection block. The question now becomes, are we going to revisit these lows? And if the American dollar continues to climb, we can expect to see these lows get revisited. So rejection block, rejection, rejection on the way down. Wait for a clean reversal pattern to occur here on the daily to get long. Now we've got this swing above these highs. This is your reversal pattern right here. Body gets through. We get back into this here. This would be the rollover pattern to run back down into a deeper sell side. So look for some support here and on the lower time frames. So if today or tomorrow, Tuesday makes the high, and we get back into this, even tap into the edge of that fair value gap right there, and then roll over and come back down again, look for a swing pattern on these lower levels to catch a reversal. Once you catch the reversal, then your objective would be first obviously the rejection block, and then back into this fair value gap below you here. And the American dollar continues to push up. It can run back up into here inside the CAM1 model. So you can come all the way back up into that fair value gap here. Let me eliminate this now, because now we've climbed up on top of this inversion. I'm finding some support, so further upside until we see how we react off this next level, whether it be just the top of this or the bottom of the fair value gap here, or the bottom of the whole consolidation, which I'd like to see the bodies, but you can get back into these wicks. So this now becomes the next level of interest for me for support. Oil. This is good. We're looking for this to stay open so we can get continuation on the upside. This was one of the ideas we talked about on the weekend, or yesterday, which was the weekend, I guess. Look for a bounce off this. Keep this open as a gap and continue drawing to the upside. So if you look for a reversal pattern, we've taken out these lows. As soon as we get back to this area, you look for that little reversal pattern that starts to occur, right? And that occurred you want to see where you trace this back to here. We'll see if we can see that little setup. You come back up, you get through it here. Unfortunately, you didn't get a chance to get on it here. It just came back and tagged it there. So you wouldn't have been able to get on. So you look for the next one. Body gets through it, come back inside it, taps the old high. Right there. That's a long. So you're looking for these kind of setups to occur at a logical level, and when you see them happening and it takes out a swing point, then you look for that kind of setup, look for an opportunity to get in. Similar kind of piece here. We have a swing pattern below a low. At the time of day, we're expecting the markets to make a turn, so don't forget time and price as well. We have a little imbalance right here. Body trades above it. We actually gap down, gap down to it. So we open down right on it, and then you're in this big run right now. A full-on run up right off of that little inversion there. Sorry, that little imbalance. That would have been zero drawdown too. Let's look at gold prices. So if American dollar continues to go higher, we should get some down pressure on gold. If the American dollar gives up a little bit, we have this right here. There's a swing. The body gets above it. You almost get back to it here. Just shy of it here. For long above these highs. So what you're looking for now is if we're going to lose some weight in the gold here now. You want to see this right here, order block, give way, come back up, find some support at it to continue down for this area. So you're using that run swing down for this swing up. You trade the distance in between. We can get rid of this guy now. Now we've nailed that. Now you're looking for the breaker here. We're inside that on the body. Now you're looking for either continuation through the mean threshold of this candle and the rejection block. You may see one of those rejection block roll over and come back down into the range again. I do like this level here, old high. Look for this inversion to hold now. You want to see a body get above this. If it gets a body above it and continues to climb, then silver, look for that order block to give way. So you want to get on top of it here. So draw your box. here to here. So what you're looking for now is support on top of this, like a bold candle to go through I'd like to see a bold candle get through here, through the mean threshold, stop, turn around, come back tomorrow, and hit this inversion and continue pushing through the rejection block. That's a lot of PD arrays that we need to key off of, though, to go through. So don't rush in on a buy right now in silver until you see a good solid setup for a run higher. Ideally, what you want to see is once we get on top of this and go higher, we want to see a bold candle go ripping right through this and through the top of this candle, because then you come back and find support at that breaker to continue on higher. Lots of ifs have to happen here to continue to go up on silver. If you get below this, come back into it. Look for continuation back into this range again. Go back to this breaker up here. Is that a breaker? More like mitigation. Oh no, I guess it would be breaker. So come back into this breaker here. You're really between that guy there and that guy there. Those two. Copper. Equal high sitting up here. I have to get rid of my copper. It was the first one out of 4 I got wrong. Palladium. I'd like to see that return back to these old highs right here. If not, we've already got above this, so we just revisit this old high. If we start to react off this now and start continue pushing up, then you're looking for this big order block up top here. If not, a revisit of the fair value gap below you, or maybe even dip down into the mean threshold or the consequent encroachment of that candle to catch these old highs and then continue to the upside, leaving that piece open. So we'll see how this reacts off of this candle today. Monday's always a kind of wait and see day to see what we can get in on. Those are all royal banks. You don't want those. Bitcoin is $68. Look for this consolidation, this cam model, potential cam model right here. If you go through 50% of that, in other words, you just come back to this order block and you close below it, come back to it, close out, because you're probably running for your lows, and then these equal lows down here. Alright, let's get back to our NASDAQ. So 50% of this range that we're in right now brings us back into that little imbalance above you. So look for your next little turn around here, which should be around 9:30, 10 o'clock New York time. Look for see if we can find some support off of this, and we look for a reversal pattern. And what that's the one we'll be looking for a silver bullet entry if we want to come back into this candle here. And it's a Monday, so we might be just sitting here watching it. See what kind of reactions we get out of that. This is taking out the highs. This is that reversal pattern. That time of day, right before the New York Open. If you do put your enter in here, stop loss goes really tight because you don't want to see that take out the high. You don't want to see it trade up above it, come back down. If it does, then get out, because it might have some more upside, like the 50% of the range we're talking about still. So 50% will put us at 18,357. Yeah, we got lots of upside still. But that's the perfect entry right there to short. But I'm going to wait till the right time. Once we get a big significant displacement candle down. And if you're aiming for your lows, you're aiming for these lows right here for a quick snipe, if that's what you're after. Good morning, Thomas, Terry, Christian, Ibomk, Anas, Richelieu, Gyang, and Lewis. Welcome. Well, we got 42 people in here. So look at this little pocket down here. Little run on cash. Boom, right there. Now if it kicks off of there and comes back up, and you didn't pay yourself, you'll wish you did. You're back to this consolidation again now. If it continues to drive through, then you're looking for the rest of this little piece in here to fill, which is like right, pretty much right there where it's hit. So that's a quick little run into some liquidity here. And then wait for a return back up into here. This is like engineering. Liquidity is higher. All these people that are trying to go long, you just cleared them out. Now these people are going to go short. We'll come back like this over again. Engineer, come back and take them out. Engineer, looks like we're going short again. Come back, take them out. Come back, take them out. So, and then don't be upset if it takes off on you. Who cares? Who cares? There's another setup coming around the corner. We're in the 1 minute chart here. ORO. You may change your mind. If I give you some bad trades here, it'd be like, unlike this. Smash the unlike button. That's the rest of it filling up there. Now if this just rolls over and comes all the way down into here, that was the turn. I got bit here. I got bit off the Cam 1 model here. This is all consolidating, right? This is Cam 1. I came back into Cam 1 and it ended up being the model for a Cam 1 this way to go higher. Then that model there is your Cam 1 come back up into reversal, and then if it starts to eat up more than 50%, you know it's running for the bottoms, and it did. It actually ran straight to the bottom, right through. You wouldn't have had an opportunity to get out at 50% on that. It would have ran straight through and took your stop, which was been pretty close anyway. So now it's ripped down into that area we're looking at. So now you're looking for another little pop back up into this level. We also have this fair value gap here. It's now become inversion. So keep your eye on that level. And we're 5 minutes away from the open, so this is when you see it turn around and just start slamming all the way down. And you go like, oh, I should have kept that. Shoulda, coulda, woulda. What's your strategy? What's your model? Trade your model, develop your plan, get your fail safe. Good morning, Tristan. Now, see how we've got a swing below these lows? See that little fair value gap there? Let me make this a little bigger. See, there's a little fair value gap right here. You've got one that says we're going low. We've got one that says you're going to go high. So if we reverse and go back through this, then you're really stuck between the two of them, going which one's going lower or which one's going higher. We want one to go lower because we want to see this roll over and come back down. But we may see this just slow, steady grind up in here and then just hit this. And for a Tuesday to make a high. Mean threshold of that candle, you don't want to see that lose because that's your breaker. So this candle here, its key level is sitting right in the middle. So that's the line in the sand for higher prices. So there's a nice little imbalance sitting right in here. That's why I like that level to look for a reversal. But we are also inside another level just down here, which is inside the bottom of the candle, which is a support level, to see that key off of there and come back down again. So here you've got that reversal happening right in that area, but we also had it here. We also had it here. And if you're just running for the stop losses below you, then you're making money. And if it just goes sideways like this, you're expecting it to roll over and start aggressively moving south. You don't want to see it just sitting here like this. It's just accumulating engineering liquidity above and below the market, and it runs back, cleans those out, runs higher. Runs back, cleaning these guys out, and can run higher. So this, you don't like seeing, I don't like seeing all this stuff just going sideways like this. That means they're just engineering stuff. So you wait for that fair value gap. Okay, I love you, love. Have a good day. And then, so when you see this all going sideways, you can get excited and say, yeah, it's a good cam model, but really be tight. Look for your ranges. So we're coming up for the open now. There we go. Keep your eye on this level here. One minute to go. Good morning, Dave. Julian. There's your open. They ain't done up here yet. See what I mean by that? Just keep coming back, clearing out liquidity. Just when you think, oh yeah, I can go short on this. No, keep your eyes on that upside objective. And don't forget, we haven't hit 50% of that range yet. So just wait and see. See how the body got above this right here? Came back inside it. Stop loss will be here. Running for there. But again, it's like I said to you, is this the short one? Is this the long one? We're anticipating prices coming back up here still. Order block is validated here. Come back inside it. Continue to the upside. $3,857 or $8,357 right at this level. $857. Look for up that range somewhere. Yeah, that's what we're looking for, Julian. Just further upside into this fair value. Then we're probably going to head much higher into this fair value gap. So I do like to see these big swings like this with these inversions. So we're looking for a big punch up like this. So if we get a reversal happening in here in terms of a little retracement and the next pump up for a price like finish, where would that put us? Right back to this fair value gap fill. If that's the upside objective. If we're just coming back to tap that fair value gap, well, that's it right there. Yeah. If that is it, then we might run just above that 50.61. My stomach's churling away here. No breakfast yet. Anyway, look for that as our upside objective. And we'll see what kind of reactions we get in there. Order block validated, come back up inside. What else we got going on over here? So this is the downside here on ES. Wow, look at that, really just that's 9 o'clock. I'm looking for the that would be, let me put this on a 2 here. There it is. body gets below this reprice rebalance. And you just get below it here, come back up, hit it here. Well, okay. Yeah. Looking for it to run back up into this level, roll over and come back down. Still inside that fair value gap. What's Dixie up to? Still pushing higher, looking for that here. That fill, and we're seeing what kind of support we get inside here now. All the ES has to be in June contract month. Good. Thank you very much for that. Thank you. Thank you. No, it's just futures there, hey? All right, let's do this. Oops. Let's add that in there. June, June, and June. Thanks, iBomb. Appreciate that. That changes things up. We're back up on top of this fair value gap here now. We've traded below it. We come back up and through it. So we'll see how it closes today. If this just gets into the rejection block, hits it, rolls over and comes back down again, you want to see that close below here on the day. So I'm flat on ES for the day. Potentially upside to rejection block. And wait and see what kind of reaction you get off of that. Around 10 o'clock, we'll see what we get here. If it takes out these highs, look for that reversal pattern to come back into that range again. And what have I got? This is all in June. Okay. That's good. June, June, June. June, 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 and June, June, June. Am I seeing the 4-hour SIBI? Let's have a look on the SIBI. Yeah, that's sitting right in here. That's it. 483.74. 83.74 puts you right in to that fair value gap above you. Just pop it in there. So yeah, that could be a nice little fill for sure. That candle's high is 1835, and we've already gone through 18,350. So we're just coming up to 18,350 is right in here, so that'll be the bottom of that inversion. And this one's close is 55. So 50 to 55 inside that range. That would fill that fair value imbalance right there, and it would tap in on that fair value gap above you. And what IBOM just pointed out, or Julian just pointed out, yeah, Julian just pointed out that the SIBI on the 4-hour is all the way up to 80 or 90 something, so all within this range here. Fix your microphone. We hear you, computer fan. I can't fix that, man. That's it. I can move it a little further away from the fan, but that's the way it's been for 160 videos. So I'm sorry if it bothers you. I'm sorry about that. Can't fix that. Are you seeing the 4-hour SIBI on both? Yes, I am. What indicator are you using that puts a red line on your smaller charts? A red line on your smaller charts. Down here, you mean? This is just a New York Open. And this indicator is just whatever the ICT session one set up for life indicator. It just marks all it does is just marks the open and close of the or the high and the low of each like Asian session, London session, New York open, New York close, and the regular trading hours gap. That's all it sets up there, and this just marks out the New York open midnight candle. I can't set the sensitivity of the microphone. I don't know, let me have a look. It's a fancy mic. I would imagine I'm going to adjust some stuff here. You let me know if you guys can hear anything different. If I turn that down, does that make a difference? If I turn this up, does that make a difference? The audio is fine there. Yeah, it's always, you're the first one to complain about my fan settings. Yeah, it's one of those fancy Rode mics, so it's probably super sensitive. Unfortunately, the fan, if I had the computer on the floor, it'd be different. You wouldn't hear it so much, but I don't have that kind of fancy setup. And the fan is like literally, I can see it right there. I got the screen all there, so yeah. Sorry about that. Not much I can do about that now. So there you go. There's that. The upside, that objective is now hit. Now we want to see what kind of reaction we get inside here. Okay, they don't mind the audio. You got super sensitive hearing, my friend. So that's the mean threshold. That's that bottom of the fair value gap. It's the inside there. So it's a nice logical level we want to see a reaction off of. But I don't like seeing all this kind of slow stuff. I want to see a big rip up, rip down, give us a big open here, like a typical setup should show us. You might end up seeing something on the 15-minute, or we might have to move to a 5-minute. If some of you are monitoring a 5-minute, if you see something like a nice clean setup like that, there's that little tiny imbalance right there. I'd hate for that to be the actual turn off of our expected level. If it is, I'll wait for a deeper confirmation. So you see how we've traded below it right there and just popped back into it, and now we continue on the downside. And if you're short there, your stop loss is just sitting above that high. And you want to see it with some purpose here starting to leave. You don't want to see it just going sideways like this. It's just taking out that little low. Coming back into it one more time. If it trades above this, stops, and then comes back into it, get out, because it's probably going to go higher. That's a nice little reaction off of that. Came back up and filled the rest of it in. Now you want to see that really start to get some legs now and start leaving. Previous day's high was taken out here, so there's that good little, another little swing point we're looking for confirmation on. See this, I'm not a big fan of all this just side stuff. If it's got intentions of coming back down, you want to see it just start the descent, come back up, just tap it and then just start going. It's maybe one of those slow, insidious kind of roll over, come down things. So we're definitely at the line in the sand for that order block breaker. We've come all the way through all three arrays, and we're landing right on a logical level. You could say, yeah, we could reach up into. If we pull our fib tool again from the high to the low, we've hit 50%. We just popped above it to get our premium level inside the perfect level that we're looking for return. So ideally this would be a great multiple confluences that support inversion, imbalance, mean threshold, above an old high. So there's like 4 confluences that say this would be a great place to see a turn. And we still have 10 more minutes. So 10 o'clock may go boop, pop up above it, then create our silver bullet for a short. So I'm looking for a silver bullet now that would give me a better confirmation, telling us the direction. And you look for around just after 10:10. See if we get something in there. This rolls over and goes back down now. We picked the great high, a little tiny turn. I guess if you put your stop loss right there, that's not a huge loss, depends on the leverage you put on that. But just be prepared at 10 o'clock. We may just run back up and take the high that occurs just before 10 o'clock. You'll hear Michael talk about that a lot, where price just runs up, turtle soup this sucker right here, and then come back down. Now, whether or not you guys are brave enough to take a turtle soup at 10 o'clock to take this high out, good for you if you do. There's a lot of trust you have to have in all these arrays, and they're overlapped. There's like 4 confirmations, so I might actually take the turtle soup if we get one above here, just so you can see somebody in a demo account do that. I might actually try it on my live account too. Let me see where I'm at here. See, MT5 has given you a really nice setup on MT5. This does not look that clear on here. Now, if it doesn't return to here at 10 o'clock and just keeps coming down, that's great. We'll just wait for a new confirmation on a silver bullet for a continuation on the downside. And then we can say, yep, whoever did take that, good for you. We got your confluences. If you all boldly jumped in on that little fair value gap there and the reversal that occurred at the time we were expecting it, then I'm happy for you. I think that's great. And you should be scaling pieces out of here in a case of uncertainty. But if you're bold enough to say, I don't care now, Darren, I'm moved to break even, so I don't care what it does, I'll just let it keep running. I don't know what your strategy is for managing your trades. See how the rejection block is hit? If this turns around and comes all the way back up again now, you've lost all the potential for your profits because you're not scaling out at rejection blocks. If you just keep running for these lows and you don't get them, double check. You probably could have scaled out at your rejections. Now you want all these to continue to provide support on the way down. So they'll come back up, find support. You don't want to close through them. Because when you take these swings below lows, this is the reversal pattern for a continuation to the upside, and this could be the next price leg up. Now, if you've got a solid trade plan, what I just said there shouldn't bother you in any way. You could go, yeah, that could happen, but I'm covered. That's fine too. What's your trade plan? Don't let me try to talk you out of it. Four more minutes. Now, while we're waiting for this 10 o'clock open to happen, we have a run above all these highs here already. Regular trading hours gap's about to pop in. We're about to see what kind of range we have to deal with. So far that's panning out quite nicely. We did call a perfect high Well, we're probably at a couple of handles, but you know, we ain't done yet. So this is good. Now you want to see this breaking. Stream down, stream down. I don't know what stream down. You're expecting more downside? I don't get what you mean by stream down, guys. You're both saying the same thing. Stream down, stream down. I don't know what you mean. No, it's inversion. Continuation here. See what kind of reaction we get here. Oh, my stream was down. Your video stream stopped. It stopped for a while, but it's back up now. Okay. I'm like, stream down? What are you talking? Oh, my stream. The live stream's down. Alex, it's hilarious. You haven't been here for a while. We spent like a night trying to work on latency. Couldn't fix it. You're going to make sure you check, go to your little wheel at the bottom of your screen there, or of the stream, and make sure you double check that your normal is on. Somebody. Good morning, Derek. How are you, buddy? Streamed. Yep, my urologist told me stream is down. That's hilarious. That's an appealing medical joke for a paramedic. I like it. We got to stream down. Pipe her down. We've got to pipe her down. Look right here. That little range right there. Well, actually, you'd have to get down to something like that. I think that's the bottom of that. Or do you go all the way over here and go down to there? That would be the rejection block. So look for this to be the next price leg down. What would that need to come into? Provide you the next leg down. Whether you say, I just want to see it come up to here. start breaking down here. Look for that fair value gap in the next 6 minutes or so for a silver bullet entry. I keep trying to mirror the idea that we want to come back down, but we could be just heading back up. I got to be okay with the idea that we may just start marching up higher. But typically you like to see in NASDAQ on a seasonal tendency to run down into April. And March can be quite choppy, but near the end of March we'll just see this big run down right into the middle of April there. So like I say, if this gives way on the downside, I want to see a big bold candle rip through this level right here. I want to see a big bold candle get through that on a close, create a little fair value gap, come back up inside this breaker, and then get short. Chris Gardner, are you connected on Wi-Fi? If so, that could be your issue. LAN connections are far superior to Wi-Fi connections. That may be. But I've checked my Wi-Fi the other day, and I've got 34 megabytes per second or something like that. Upload and download speed. So I've got more than enough to run video. And you're right, landlines are much more secure, but I've never had a problem with this. But thanks anyway for that, Chris. I appreciate it. Here's your pivot point. You want to make sure that we stay below this and not start getting back up on top of it, start climbing higher, because then you're back into this range again. All the way back up to this breaker here, and yeah. This is where you're going to wish you were taking off profits at those rejection blocks I was mentioning, because all your profits are getting eaten up again now. So right there would be my line in the sand. If it was coming back down, you're in here and you're tracking that down, you're scaling pieces out on the way down, and then that becomes your line in the sand. You say to yourself, I don't want to see it trade back through that. And the moment it does right there and opens and does not come back to you and starts to pop up again, you're out. That's the close above here. Now you may agree with that or disagree with that. You may be new here and not see that, but stick around. You'll see things like that all the time. And that's your fail-safe right there. Your fail-safe's chasing you down behind your scaling out part. And you're not always aiming for these big Hail Mary plays. And if you are, this is where you see yourself get, all your profits get eaten up again. It comes back to your, unless your stop loss is sitting up here and you want to weather all this and you don't mind saying, okay, that was all profitable, but I don't care. I'm just in it for the long haul. Now you're getting squeezed. I think some people tend to think that they've got to aim for these big lows instead of saying, you know, I don't mind nibbling. It's like they say, how to eat an elephant, one bite at a time. You got to do it. Just nibble away at it. And you'll just keep paying yourself, move your fail-safe in behind you. The moment you break an old low, you go from stop loss to break even. You go to the next one, move to the previous one. There's many different ways you can manage a back end. Or just move your fail-safe. So breaker wasn't hit. Inside this reprice rebalance, it comes back, snaps back, and continues on. When you see price rebalances, they're like a quick way for price to give you an indication that we're heading in a very bullish or bearish direction. You treat them almost like fair value gaps. So you come back here, you'll see it fill. That whole thing fill back to that order block there. React off that. Get on top. You could almost look at that as, if that's a fair value gap, the moment we get on top of it, right here, close above it, come back, find support at it, continue on to the upside. You treat this like one of these. And don't believe me, go look at the ICT index, and he'll tell you all about what a reprice rebalance is. Well, part of it. If you're not a charter member, he's talked about this in the past. See that area getting squeezed again? Inside this range, back to the breaker. So look for this price here to give way, or find support. You have the low, the open, and the mean threshold. If we trade through the mean threshold, look for the highs to get taken again. And here's your silver bullet, or here's a silver bullet, if we can get in on that. So if you get a pop off of here, a retracement back in, you have to ask yourself, is this the further upside to an area we think should provide us a level of support? And do I want to trade inside this range? And where are we sitting? If we trade in here, it's a discount. Then you want to see price stay above that. If it doesn't, use your fail safe. Stop loss goes here. And if it trades below that on a close, before it takes your stop loss and then trades back to it, get out, because that's reverse direction. Look at that, right off the mean threshold, right there. Now you want to see if that closes above it. Look at the rejection block. Sometimes you just get reactions off of that and you don't get your full height taken out. You just get the rejection block, hit, roll over, and come back down. Looks like we might have to reserve ourselves to going higher. I don't know. So now what you want to see is, you want to see a big bold candle get above this and come back and find a level of support here to go higher. That puts us where? I think that puts us right near that 4 hour, does it not? Yeah, that puts us in a fill of the 4 hour fair value gap. So look for that to provide a level of support. Now that we've traded through this, we hit the rejection block, see that? And we're just getting a reaction off of it now. So do we validate this order block on the downside, come back in to provide a level of support? Look for this order block to provide support on the downside for an up. We've got a fair value gap sitting right here. Does that provide a level of support on the underside and continue back down into a discount array inside this smaller range that we're in right here? A lot of people might be saying, I'm aiming for this every single time, and you'll realize that you should have paid yourself at rejection blocks. because now your profits are eating up again if you're on the upside off of this. Well, you didn't get off that breaker, so, but you did if you were looking at the Michael's like masterclass level thing, looking for this as a reprice rebalance, so that becomes a fair value gap. Come back inside, fill, find a reaction off the top of it, you close through it, come back, tap into it, continue for upside. It's easy for me to say. I know I'm form fitting it afterwards. Some people will say, oh, you're just form fitting it. Okay. See, now we've traded below this order block. That validates this gives you a buffer now for that high. So I think if you kind of reverse engineer this, we can almost anticipate where this could come back to. If that's the upside objective. So there's your return to the order block right there. Continue down to the downside. Now you're looking for a return into a discount array. We have a premium array here. If we lose the mean threshold of this, then we're continued to the upside. Then you got to look for this to be the next price leg. Then this isn't. You're looking for higher than that 4-hour inversion. If we are getting a run back down into this range, look for 50% of the range. So that's your premium level fair value gap. Your discount level fair value gap is obviously down in here, here. Your mid-level, let's look at your 50% here and see what we get. So that's where your discount array is right here. Starts right below there. So we could run down into the fair value gap here, then continue back up again. You want to get on the other side of this to get some support for downside prices. If we get this keeps finding a level of support, then you look, that's more stronger for an upside run. So when you have discount array, premium array inside that little range, you're looking at like a premium fair value gap and a discount fair value gap. If you start to run all the way down to the 50% and run into your discount array, that's more of a reversal, a reverse of fortune, so to speak. Come back to your breaker. If you get on underneath that, it's more of a positive sign for a run down. If you run up, create a fair value gap above in the premium portion, find some support at it and continue to push up higher. Obviously it's more positive. If this holds price knee high, so it creates a high and a low, you go from premium to discount, premium to discount, and then you see it starting to compress, getting smaller and smaller till it runs out of arrays, and then it just goes, takes off, or comes shooting back down again. So you can think about the range you're in. So you're in between here and here. So you got these two candles, that candle. So you look at the mean threshold of that one. If you break that to the upside, then we're going higher. And if you break this, we're looking for a return back into a discount array or 50% of the range. And if we break through the 50% and fill this thing up, then you're looking for this breaker right here, last up close candle before run below these lows here. And then, so that there lines up with, remember when I pulled my 50%, look at the top of this candle here and see where it lines up. It should give us just under the 50% range. See, there's 50% right there. Just under that gives you that return to 50% discount to go higher. And that's the level of a breaker you want to see it give you a little bit more support. Plus there's a little high point there. So there's the mean threshold, holding price. See how you've gone through this? You've hit it, filled it, you come back up, and now we're kind of bouncing on the mean threshold of it, or the consequent encroachment of that. Tap, tap, tap. Now you want to see it just tap it and leave, or drive right through it, find some support on it, and continue pushing through. So if you're looking for an entry right now, there isn't one. You wait. So you want to get yourself a discount if you want to go higher, or you want to get yourself a premium if you want to go lower. So here's your, I want to get a premium to go lower, stop loss would go up here, and I'm looking for a run down into 50% or more for a quick snipe. We're talking like really quick snipes because you're in a small range. So if you want to grab your snipe, if you're overshooting, you're looking down here, you're running through way too many PD arrays that could just take you out. So just grab low-hanging fruit, move to the sides, wait for your next little snipe. Somebody offered you $100 and waved it in your hands and said free. You go, no, I'm going to wait for a stack of them. You take the $100. At your age, you know, those urologists, you know what? I've got my urologist on speed dial. Big RTF gap down. Return to fair value gap. Where is that sucker? How come it? It's right off this order block here too. Oops. That's supposed to be 15-minute. That goes back there. There we go. So we continue to find support at this to go higher, and we start to eat through that fair value gap or that mean threshold right now. Like I was talking about, if you find this and you keep finding a level of support and you can get through this, then this provides a level of support to go higher. So just watch it. Just watch your price action. There's a rejection block again. Now you want to see this really start to get some legs and start climbing up higher now. Good morning, Kitty. How are you? Our age, yeah. You and me both, Derek. Am I a charter member? You obviously haven't read my bio. Yeah, I'm a charter member. I'm one of the original 800. Not much going on, Julian, no. If it pops through here, this is when you get into consolidations. You go, I'm long, I'm short. I'm long, I'm short. Every time it pops above here, you stay, I'm bullish. If it drops below it, I'm bearish. That's why you're in consolidations and you change your mind. You get beat up so many times. All the time you're finding a level of support, but don't forget they're engineering a lot of liquidity in here right now. There's a ton of people that want to go long right here. And all those people want to go short. Boop, just keep taking them out. Boop, taking them out. So if if right here and you have gone long here, rejection blocks your first place. then this old high, or that old high, that old high. There you go. And the point is made. And that be it. I don't know how many handles that is. 39 to 60. Well, it's 22 handles. Looking for your next upside objective. Stop loss now would be like zip, right up in here. So it would be a zero stress trade. Wherever you had your stop loss, bang, right up in here. So if that rips back against you now, you're in profits. You scaled out some here and here, 20 handles, 22 handles there. If you hit that, another objective, scale out a portion there. Unless you're shooting for this objective, that objective, that, there's tons of arrays above you. Bink, there you go, that one's done. I love seeing those little reactions off it. Just tells me it was an area of sensitivity. See that? If it drives through it, I don't care. I just love the fact that we picked an area of sensitivity, it hit it, and it's like, wow, whap right off of it, like we picked when it was here. That's precision. Good morning, Southie. Had a nice trade this morning, made my goal for the day, came here to learn now. Oh, good for you, kitty. Then when it broke the high, you got out. What did you do? Which one? Come on, share us. Tell us what you did. So you didn't get your silver bullet? No silver bullet here. There's that 1010 I was telling you about. Look at that. I was looking here, but 1010's right there. Hits your 1010. That's your silver bullet for a run higher. It was a premium, so, you know. But again, reinforces my point about waiting for that 1010, 1012, 1016, 17 candles, because all of those went ding, 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 hit right inside that multiple times. Kept saying, come on, get on, get on, get on. Ah, forget it, I'm leaving. Congratulations, Kitty. It's an awesome trade. Hair, straighten my eyebrows, shave my eyebrows, do a live show. I got myself one of them little circular lights yesterday, came in. I'm anticipating I might make 500 people this week. We break 500, then you get to see my mug in the corner, and I'll be looking at you directly, Kitty. I'll be saying, congratulations, Kitty. Now we're through. We'll watch where the body ends up here. See how the bodies are respecting that level now? The height. That becomes an important level. A makeup person. Yeah, I need a trowel, and I need a one of those big bulldog paper clips. Pull all my skin back. I don't look as spry as I do in that picture that I've got on my thing there. I'm clearly aged. Can we just do it like the voice? I'm alright with that too. So look for this level here to break on the downside for the swing potential, for the downside reversal. Again, I'm not crazy about marrying this idea of reversing over all the time here now. So we were waiting on this one. We did get a reversal here to play. You got to be really snappy on your retreat on the way down. Make sure if it does close below this and you come back inside it, you put your entry here and your stop loss goes up there, and then you do that whole fail safe. Don't forget your fail safe, or whatever method you guys use to protect your principal. So let's do one here. What the hell? We'll wait and see where this closes. Nope. Don't touch it. This is like a Cam 1 model. To run here, or the up close candle above you. Whatever your method is for scaling out your trade, it's up to you. But if that's your Cam 1 model there, Cam 2 model looks a better one to reach for. You may only get a Cam 1 if this fair value gap fills. We still don't have a body below here yet. You see that? So this could be just another leg up. And we just have to resign ourselves to seeing this continue higher today. It's running all the way through the objectives that we were aiming for. Now you've got this fair value gap inside here. If we get on top of that, then I'm definitely full bullish again with the NASDAQ until proven otherwise. Twelve seconds. Because I already took a couple of hits this morning, I want the perfect entry and a small stop loss above me. If I don't get it, then I don't get it. And if it takes out this low before it comes back to me, I'll close the trade. Because then there's that potential swing point, right? The swing reversal taking out lows and then reversing to take out the highs. Always sitting between this one and whatever one forms down here to come back up again. Pretty close. And if it closes below 50% before it hits your stop loss, close it out. So you've got one model that says go higher and one model that says go lower. Ask yourself, do you want to get in on any of those? There's your first entry. So I almost want this to fail so I can show you how this fail-safe works. So there's the second entry. We'll see if it doesn't work out. Now, ideally, I want to say just tap it. You're right, it could be a risky entry, so let's see if our fail-safe works here. We've got 80 people to fail in front of if this doesn't work out. So it's literally just tapping off my entry. This rolls over and comes back down now. That's literally the spread that didn't get me in. That was tapping on me right there. I love to see this just take off now. Not a good sign, hanging around in here. But I want this to fail now because I want to show you how this is how that fail-safe would work. Provided it doesn't rip right through and take me out, then the fail-safe is just my loss. There. So that's in. Now we're going to watch to see where this closes. Now if it closes above, there it's closed above and I'm out. Comes back and taps out. We're going to go higher. So instead of the $1,400 loss, when you see this finally climb back up again, just that close above right there tells me we're going to go higher. That's the fail-safe you look for. And as soon as it opens and comes back into your trade, you break out, you get out, you break even. It went pop, it popped up, so I'm out. The moment if it just literally runs back down again, I'm in. But the moment that clears that high again, or that close, I'm out. So it popped up, I'm out. Take my loss there. Then it came back inside. Again, I don't care. I don't want to see that high. Watch it run up to this high here now. And if it doesn't, it's probably coming off of this order block here. You watch this mean threshold, or that order blocks open here, mean threshold, and then the rejection block. Those are your 3 levels above you yet. Yeah, I have no live trades going on. I'm just playing this in the demo. I want to show you guys this whole fail-safe thing and how it works. How it saves your ass, your stop loss. If you're on the wrong side of this, then you'll find out you're on the wrong side. If you're on the right side, it came right up, took you in, and then rolled you over, went down. If you're on the wrong side, and that's not the reversal, then as soon as it pops up, comes back into get you out, you should be break even or even way less a loss than you were anticipating in terms of your 1%. There's your rejection block again. Now here you'd be like, oh, I'm really getting squeezed on my stop loss. Now if it continues all the way through, you would have taken a full $1,400 stop loss there. So you've got that pop above, find support, find support. Now you're looking for a rejection block, which would be an objective if you're going to the upside. Now I'd like to see that kick off here and start really running down after it's hitting that level again. See that? That level is super. If I just extend that out here. Get out of there. See that? Now we're creating these relative equal highs. We're in this consolidation. We're still respecting the mean threshold of this, even though we went through for the wick. The bodies are still respecting this guy here. It's not a break or anything. It's just a regular plain old pawn order block. Look at the range you're in now. That's your equilibrium and break. You're not a breaker yet. I guess you could consider that the swing point. So anyway, this candle here is where you're looking for. You're between, have you traded below that guy? You have. You're between those two candles right now, or that candle and that candle inside that bigger range still. So look for it to come back into a discount range or equilibrium, that order block. Now you see it starting to compress. It's got to get out of here now. It's going to run out of a raise to bounce off of, and it's going to have to extend. So you've got this mean threshold here. Yeah, extend. It's got to extend higher than that. It's not just going to stop there. This is now a valid order block. So if we look at that range we just saw right there, I really got to watch that connection there. There to there. Let me get this out of the way. Look at that, right to 50%. It comes with a discount or 50% and then starts to run back up, takes the high out. Always moving in between little ranges, higher, lower, 50%. All it needs to get to is that 50% line or just underneath it to go back up to a premium range. And if it just stays inside that, it's more bullish than it is bearish. It's supporting off this order block in the middle, which is your equilibrium point, also the mean threshold or consequent encroachment of this inversion. Can't do anything about the lag in there, Julian. So now you've taken out a new high, come back into a discount array. So run right through that 50% now, run right into this order block. It's high, mean threshold. There's a little tiny fair value gap right here. Watch that one. We swept. Did we sweep those lows? No, they're equal lows. This becomes an order block now. And we're just kind of stuck in a small range waiting for it to break out. It's just banging back and forth between these smaller, these arrays now. That guy there and this guy here. Slam, see, hit it nicely. Either look for the rejection block now and start pushing yourself through this range back to the other side. Find some support inside here on this. Now you're bearish again. Those equal highs, they're not going to leave those untouched. See that right back into that discount array right there? Bing! And then kick off of it. Come back into order block, fair value gap. So you see how they start to become all these overlapping, right? But look for the premium and discount arrays. Like so, that's your premium gap. This is your discount gap here inside that big range. So you're kind of looking like this. Well, not anymore. It's a little tiny guy right now. It's from there to there. And this guy is there to there. Small range, premium, discount. Should bang around inside off of those two. And then one of those has got to let go of price. Don't forget you also have rejection and rejection blocks. Wick high, wick lows. We're back into that idea I gave you here. If we get on top of this and find support at that, chances are we're going to run the highs. If we bang around inside here, we're banging around inside the equilibrium of these two, off this guy, that guy. If we get below him, come back into him, chances are we're going to run this rejection block in the lows. So just keep your eye on it and just watch price right now and see how it goes. See how the bodies are respecting that edge? Just stuck in the middle of those two now. Where do I go? Run for the rejection. There you go. Close below. Pop up. Tap it. Keep coming down. And it's just a small little way to go to get that rejection, which is right there. Boom. Now push through to the low. Keep pushing lower, or you with the rejection block is all. SMT, it's that time for someone cracking eggs. I'll catch you by the stove. Okay, Derek, enjoy your eggs, man. I'm still waiting for my kitchen to get built. I'm still sitting on it with the designer now to get this slab and everything else. The electrician or the guy came in yesterday and tore up that little retaining wall we had. So now the kitchen looks nice and open. There's like construction everywhere. We have no dishwasher, no sink, no nothing yet. So we're washing our dishes in a bowl. Zach, there is a 3-minute fair value gap. If it gets inverted, I start looking for a short. All right. You go, Zach. 3-minute. Let's look at a 3-minute. At what Zach's looking at here. This inversion, we get below this, come back inside it. You want to body trade below this, so, and then you can consider that, I guess, your inversion. Come back inside it, continue on the downside. Good eye, Zach. Well done. Now we're calling all this stuff right back up in here when it was in between these two, and we're saying premium discount. If it gets to the discount, it's more of a run to the lows. If it runs above that, gets in here, it runs for the highs. When you're in a premium and discount range inside here, and it literally did exactly what we said, popped through, came back in, tapped it, hit the rejection block, came back inside, full fill of that rejection block one more time, and then came back down right to the lows. So you're looking for it to continue on down, taking the lows out, so Zach can get his 3-minute order block below, then pop back up inside. There's a little fair value gap sitting in here right now off that order block. So now you're saying premium, discount. Is this the little, do I want to get above this now? Now we've run those lows out. We're calling for all this when it does this. There's your little telltale sign right there to go short for the lows. And again, they're so close, there's not even worth taking a trade. But if this continues down the downside, you've had lots of opportunities to see where price here broke down below, creates a fair value gap, come back inside, hit the fair value gap, confirmation that it's nice. Now if we can get through here, that will create an inversion. That's a senior array, so you get through it, pop into it. Now there's extra padding in between your stop loss that was sitting up here for a short. Not that you would, you're inside a consolidation, but I just wanted you to see that there's a point where you can see where price changes direction and you find support off of those levels. And then when they change back the other way, you have to change your mind. You're in a consolidation. But right now, you have support saying this is a short before it's a long. Even though you've got equal highs above you, right now it's short. If it changes their mind and wants to go for those highs, you'll see. It'll tip its hat when you see one of these fair value gaps, inversions, give way to the upside, same kind of thing you just saw right here. And it says, hey, look, I'm heading back up for premium array. So you start looking at this range that is creating here right now, because it's not this one anymore. You're looking for this range, or from here back to here. That's the range you're inside right now. I guess that would be the high from there to there. You're back inside that range. So as this is extending, keep looking. If we create a swing point there, look for your order block here and the higher array, and then start trading off of your inversions and that inside there, because now you've got this internal range liquidity you're looking for. Rejection block again right here, hits it nicely. If you're scaling out, scale out, scale out. You should be taking some there. If you're just aiming for here, you may start getting squeezed now. And you'll only know that if you get on top of this. You've run a low, then you look for this. If we get through this and come back and find support at it, you're looking for higher prices. Because this becomes that swing below the low, inversion style, come back through it, and run back up higher for a premium array. You want to see, just bury this thing right now, just start shooting straight down, take these lows out. Zach, message retracted. Now I'm impressed there's 79 of you in here just to sit here and watch price action bounce around, not do a heck of a lot. But if you study it, you can still see that it's creating a range, a small range, and running from premium to discount. Look for your arrays. And if you study your price on this 1 minute chart like this, and you start to recognize things clean, and this isn't just a bunch of random little candles with little wicks going all over the place. They actually have specific objectives they're still reaching for, even inside these little consolidations. If you understand this on a 1 minute, all the other time frames you play on, that you trade on, you'll understand them way clearer. And your setups will be cleaner, because you'll know what to wait for, and you'll know markets when not to trade. When ranges are too small for you to put a stop loss in here and risk, you know. So when I see this, I start going, oh, there's a cam model forming in here somewhere. As soon as it starts to consolidate, you just go, ooh, exciting. This is going to be a cam model. Where do I anticipate it might best like to hit off of that? Do I want to hit it off on a high, or do I want to hit it off on a low? How's it form? Do we have a price leg that goes up? Manipulation? Break down below it? Great, then I think a cam 1, a cam 2, and a cam 3 model entry. If it breaks down and goes back up, again, cam 3 in the opposite direction. It'd be nice to see that just create a consolidation, rip through here, come back up, create your cam 3, and this one here. There's a small range to run through. So I like the premium level up here of that little range you're looking at right now. Again, if we're bearish, this should hold price, and we should start coming back through the order block. If we don't, and we get up on top of it, we're running for a premium back into the range again, and you're back into consolidation. I've been doing it since 2016, my friend. I was one of the first original 800. Not that that makes me a great person. It just means I'm just as stubborn as the rest of you who joined in back then. And here's your premium array. Not just sitting here, we are learning so much, brother Darren. I'm glad you're learning something, Thomas. The 1 minute is hard for me when the market is not doing much. Well, that's the whole point, though, my friend. That's the whole point, Zach. This is where you have to study price action. If the 1 minute's not doing anything for your liking, it's still doing something. And if you understand a 1 minute chart, even in situations like this when it's doing nothing, you'll understand a 3 minute chart, a 5 minute, all those other charts. And it's boring as hell to do, but you've really got to put the time in and look for each damn array inside the range you're in. Too many people just sit, watch these candles bouncing up and down, and they're not taking the time to actually look. What array is this bouncing on? What range am I in? Is this a premium right now, or is that a discount? That looks like a nice little premium distance from between here and here. Look at my 50%. I just went above into a premium array. Now if it rolls over and comes back down and finds some support below here, that wick was just enough to run into the premium level, to run back down and start driving price down. And my discount array inside the range that we were in is, even in this one, it's still in a discount. That's the premium discount. We're still inside that range. We can start getting deeper. Now watch this guy. Watch that guy. You want to see it get below him, come back up, get support, and continue down. If it doesn't, it just comes back into this order block, because we've already run the high of it. Run back into the order block. You want to see inside here. There's your swing point. You come up to here. You're already in this one. See that? There, bang, bang, bang. It's got to go. It's got to go down, or it's got to go up. Make up your mind. So there's your rejection block again. Bang, takes you lows. So all it did was just wanted to get back up into a premium level, just above that 50%, to continue itself on the downside. So now you look at this and say, is this the next price leg down? And it's all on a 1 minute chart, Zach. It's all something that you kind of, as you study it, you go, okay, I get an anticipation this can go down. If this was a daily chart, you'd be like all over this, saying that, oh, it just hit 50%. Oh, look at that. It's come right back through that fair value gap. I want to see that body close below that. And if you look at the high of this candle, it is 352. And the close of this candle is 351. It's one handle below. Pops back up inside, gets you short, aiming for here. If you looked at that on a daily chart, you'd say, man, I'm anticipating lower prices. I've already ran back up into a premium of this range because you studied it on a 1 minute chart. And you didn't just sit here and wait for this big monster breakout so you could start catching something. At least that's my point of view anyway. Now you've run out all these lows down, or you've run down to, yeah, you run these guys out. There's just a little hair below those. That guy's low right there is 37.50, and this one here is 37. So it's 0.5 of a handle below that. This one below me now is right here. In terms of a bearish candle I'm looking for that is below price. So here's your discount array and that order block. If you blow through that order block, again, more downside. And we have a draw on liquidity here. We have old, I guess that could be a breaker there. Keep your eye on this area and this fair value gap in here. So now you have a swing point. This last down close candle. Look for a run back up into here. You want to see this stay open, but it can come all the way back up into that breaker. Again, this one here. I want to see this hold price here though. And then roll over and keep coming down. Anything. So I just gave them a name. So I apologize for that, but they are Michael's stuff. They're not my ideas. They're all models that they're all entries that Michael has. I've just, you'll know what I mean when you see the CAM model. Yeah, that's Michael's. I'm not claiming it's mine. I'm just giving it a name. That's all. We're all about keeping everything as germane as we can with Michael's stuff, but I couldn't just say. I had to give it a name because it's got 3 specific entries that you can use. So the body, see that mean threshold right here? The body's open, is being respected. So now you're between this guy and either that breaker there, which is the premium level. You want to start getting back up into here now. This one becomes valid. So you start looking at this going, where do I get padding? If I'm going long, not that you would go long here, but let's say you said, oh, I'm going to go long off of that now because I've swept these lows. I'm going to do a little turtle soup here. You want padding. What I like to call padding here is that we want to see this thing here provide support. So good. We want to see a candle get above it, a full body candle get above that. Start getting through this fair value gap here as an inversion. So we have a swing point. That now becomes support to go long. That's our inversion swing point. You see that? So we want a body to get through that, come back, tap one in there, and go long and leave this piece open. You're 11 o'clock now. Usually the range between 10 o'clock and 11 o'clock, or the 10 o'clock high, 10 o'clock low to the 10 o'clock, whatever the high is created in that time. The 11 o'clock is usually a 50 to 62% retracement into that range. So let's have a look at what we got so far. There's 50% right there. Funny enough, it lines up with our little order block, and look what it's doing now. Isn't that strange? Weren't we just calling that? You said to yourself? Very fascinating. Get a body above this now, and then we're looking for these highs again. I told you they don't want to leave them things untouched. So you want to see a body get above here. Here's your pivot point now for a run higher or lower. me get this out of your way. Premium, discount, premium, discount. There's your arrays. You want to get through them, start pushing for the upside. So if once we get support on this, come back, find some support at that. It's 11 o'clock silver bullet right here. Stop loss would go there. Again, if the body trades below it, comes back into it, get out, because you're going to run for the lows. And notice no body has been cleared through here yet. And there's the top of your silver bullet 1, 2, 3 entry. I like it right close to here, because if it fails, I can get back out right away at break even. Oh, we just stumped a whole bunch of people. We just stumped like 30 people. Do you see the 15-minute as an order block? Do I see the 15-minute as an order block? Oops. This? It's now a valid order block, yeah. But it's not the reversal pattern that you're looking for. We're coming into that regular trading hours gap now. I can't tell whether or not that's if there's a wick there, how far that wick goes down, because that color on the outside of that is the same as that. So if there's a gap in here, you guys will have to check that one out. I think if there's a gap between here and here, you want us to get a body below this, close below that, which is this one here, because that one just seems to be sitting right on it. So if that closes and comes back into it, and you can get short, that might be your short there. But these are equal highs, so you be careful. We're in Monday. We got lots of week left. Wait for a clean setup. So it just comes back in here. The body does not break that high. We roll over. We're already through the mean threshold of this candle. We're coming back up inside. Look for further downside. Study the 1 minute chart. You'll learn lots and lots about price action. And if you're really cool, you can study price action on a 5-second chart, like our buddy Lauriston thinks to do. So you see when I got out here, and this one here, we were taking this for a short. Remember, I put my stop loss or my entry in here, and I'm out the moment it pops above me, and it popped out, came back in, I got out. And that's my fail-safe, doesn't have to be yours. If you said, no, I'm gonna leave my stop loss there, you would have got super tight squeeze, but it wouldn't have taken you out, and you'd be in a positive trade right now, with that swing point being right here off of the high that we picked as our upside objective. So we picked a perfect objective upside. We got a swing point, and it gave you a squeeze like you could feel it. You could feel it in your drawers right there. Good squeeze. And if you're in an MT4 broker, I guarantee you they would have spread up and took you out. They would have taken you. But your trading view would have kept you in right there. Then rolled over and slowly came back down. So you see how it, now look at the body here. See how the body breaks below it one more time? Here, get a reconfirmation that that's a good swing point. You come back up inside it again, right here, and it finally breaks down away from it. And we were looking at all the confirmations in here that support that price. That was just over the 50%. Well, yeah, it's back inside that little confirmation swing point. And believe me, I did not see that till now, but we did see this 50% retracement. And we've called all the candles coming down here so far. Yeah, it stops, hangs for a few seconds. Yeah. Kapano mas at Julian. Aha. I lowered the video quality. It's fine now. You've got the lag taken care of, Capano? G. Christopher Wright, finally, an ICT trader who is no longer in puberty. Yeah, no longer in puberty. I feel like I'm getting effed a couple of times here, though, like I did in my youth. I'm getting screwed sometimes really well. And with LSU colors. LSU? What's LSU? It's for colorblind people. That's why you don't see me trading my red and green. A lot of people use red candles and green candles. I'm red green colorblind. I've got a mild red-green color blindness, and yes, I was a firefighter with color blindness, but and a paramedic. So I didn't know what color blood coming out, whether it looked green to me or what. I still, if it was coming out, I put my finger on in the hole and stop the bleeding. So yeah, I've got it. I like these bright contrasting colors. I know when it's going up and I know when it's going down. That's why you see the obvious, and a nice white background so it's clean and sterile. Hello, follow the rules and be patient. How are you? Made up over 900, so shut it down unless A1. 900, good for you, man. Way to go. Stanley, market maker sell model. Yeah, we were in that sell model right here. I was in a nice little trade there. Got out. Didn't think to get back in. I'd already taken a couple of losses on some other key levels I was looking for today. So it's great. We got a nice little sell model happening now. I hope those of you who are in that are in a nice little continuation on the downside and really enjoy, and you're managing your back end. Like some of you may be just having your stop loss up here and you're missing opportunities to manage the back end of your trade. So when you're watching this, everything that we were doing to get into a trade, you use as a reason to get out as a fail-safe. And that's just my belief. If you have a way of managing the back end, or if you're just a front end trader, I totally respect that. Michael tends to be more of a front end trader. He does have back end qualities. In other words, Michael will put a stop loss up here and he'll put his take profit down here. So that's his objective. He knows it's going there. He's a freaking genius. That's why he gets what he gets. And then he go, okay, now I don't want it. At a certain time, he'll go, okay, now I'm going to drop it down into here. That'll be profit. Now I'm going to leave it there. And if you ever get in a trade, you'll see me look for these inversion points. And I'll say, if that inversion gets taken on the upside, I know that's a failure. So what I used to get out here would be my exit strategy over here. If it breaks that and goes up higher, I know I've now got support to come up to a higher time frame, and I don't want to eat up any more of my profits. And as soon as I hit a rejection block, like right here, I'd take a profit right there. So I'm always kind of, and I'm trailing my stop loss right in behind this because I don't care. I'm on a 1 minute chart. I guarantee you there's going to be another setup somewhere along the line. So I will catch it. I may not catch the big bombers sometimes, or most of the times, but I will catch profits. Once I'm in a trade, once I'm in a trade, that is. Think insane. Great breakdown. Insane to think that Michael did all of this by himself, or maybe someone would taught him. So yeah, Michael was taught some very interesting points that he clearly can't share with us. Somebody took him under his wing way back in the day, and then he's developed some stuff that he can't talk about. This is as close as he can get to the stuff that he's wrote an NDA on. He's not allowed to disclose it, so he's developed this that is as close as he can get to not violating that NDA. Puberty? What was that? The word for us now is cantankerous. Yeah, it's true. When we get to this age, we're cantankerous. And I'm thinking now, I'm up to 16 years. It's been since I started doing hypnotherapy. And 30 years for EMS, fire. Actually, no, it's 34 years. I gave my EMS, my ambulance license up just this October, so that was 33 years in the biz. Louisiana State University. Oh yeah, now he says, and with all the Louisiana State University codes, I gather you're an American. That's amazing. You can put colors up there and people know what their favorite teams are. They know what colors football. I couldn't even tell you any Canadian football team that has that, a blue and gold. Oh no, that would be Blue Bombers. There you go. I guess you can. Winnipeg Blue Bombers, University of Winnipeg. He probably worked as an asset manager or sort of an asset manager company, as a trader, as an engineer, market maker, or something like that. Who knows? The mystery abounds of how ICT got all his knowledge. So look at the range you're in right now. We've come back inside this consolidation right here. Fair value gap. It's filled. Order block. Last down close. Is that a down close candle? What's the open? 88 close. 88.25. So it is a down close candle. That high all the way back down to that candle. I would prefer a beefier candle, but that wick, 50% of that wick right there puts you right here. So you don't want to see this inversion give way. So you see the inversion right there, full support, back out, come back up on top of it, find some support at it, and continue up. So you're inside this range here. Look at this order block. We validated it right here, and we pop back into it here, and then we start to validate this one, come back, find support at it, and we want to see it continue back up to the upside inside this range here. We've got climbing step action moving back up. So look at the range you're in, and There's your 50%. Premium, premium, premium. There's nothing down here. So the draw on liquidity, if we get above the 50% mark, is to go on top of this, or you want these order blocks to hold price and start to push back up into a premium or array. Mitigation block right here. That will run, it doesn't run above an old high, so you mitigate off of here. So it may pop up one more time into the mean threshold or consequent encroachment of the SIBI, which is just enough to get into a premium, to roll over and keep coming back down, leaving that open as a breakaway. Holy schmackers. Are you guys seeing this? Do you see where we're sitting for our subscribers? I'm going to have to get up early, have a shower. We're at 497 people. That's amazing. That's hard to imagine, man. Back at the beginning of the year, just barely making 100 people in January, and here we are 2.5 months later, and we're up to 500 people. That's amazing. So thank you. I am honored to have 500 people sitting in my living room, all squished in here in my office, looking at price. I'm truly honored, truly blessed. Thank you so much for spending your time with me. I know you have lots of people out there you can spend time with. I appreciate you spending your time with me this morning. Hopefully you can you get a bit of a clear understanding of price action on a 1 minute chart and how it moves from one array to the next array. And that the more you pay attention to this 1 minute chart, the better you're going to be at all your other charts. If you understand this super clear, imagine the kind of levels of support you'll get here. We saw this morning. We finally called that high, and it came right up into it. This wasn't just a line we stuck there after the fact. That was beforehand. It hit it nicely. We saw the rejection or the reversal happening here. Tried to get in on it there. I got out there. Took myself out with my own rule, which is fine. And now you see it's paid off. If your stop loss was sitting above that high on the reversal, you're making money. And if you're managing it properly and you're sitting above old highs and you're looking for this rejection blocks to get taken out to the upside as your place to get out, you're doing great. If you're scaling out along the rejection blocks, you're putting money in your pocket and you're just moving your stop loss lower, so you're guaranteeing yourself some money. If you're a long haul trucker and you like to come all the way back down to this rejection block, then hang in there. You might have to wait the close of Tuesday or Wednesday to get down there, but you may have caught this really early. You imagine those who held on to that with a squeeze that tight. That's literally staring that lion in the face, the bear in the face, as he bluff charges you and then runs away. That's what they do up here in Canada. They bluff charge you. Not all the time. We've seen too many patients with bear bites, and they certainly make a mess of you. Hans, you took 500 out today. Good for you, buddy. Cheryl, there's a new person. Cheryl, pleased to meet you, and thank you very much thank you very kindly. I appreciate it. Julian, is there any reason of why price is moving quite slow based on price action, or is it just because it's Monday? Do we have a news event coming up soon? I think Wednesday. Is Wednesday or Tuesday our... Okay. Sonar, Crazy Ivan. We got a Crazy Ivan. And y'all say, wait a second, ICT doesn't have a Crazy Ivan. You haven't, guys, those of you who haven't joined us, we haven't got the carrot out yet. Wait till we pull out the carrot. Bottom of the hour, we get the Crazy Ivan. Those of you who understand the reference to Hunt for Red October, time and price, there's a Crazy Ivan that happens at the bottom of the hour. It tends to look back over its shoulder to see if you're there. And if it sees you, it'll run for you. If not, it'll turn around and continue back. So I don't know if there's a news release. Let me see. Let me just check my news here. Forex Factory. We've got Wednesday. The majority of the stuff's happening on Wednesday. CAD is tomorrow. We just have Aussie dollar right now. Those are the high impact stuff anyway. I look for medium and high impact stuff. So consolidation. Order block. We validated it here. And we're here. So you're inside this range here. That high. Bang. Hit the mean threshold. This candle here. All this flat stuff, look for it to run out this back into your inversion one more time. Pull your inversion along here. Mean threshold will put you right in the mean threshold of, or sorry, the consequent encroachment will put you in the mean threshold of that order block on the downside. And it will take out your little lows here. They're engineering liquidity. Get excited. Little cam model people are getting excited now because they go, ooh, look at this cam model that's forming here. There you go. Just ran out the lows. There's your mean threshold. El Musi! El Musi's with us today. Welcome. OB Trader. Here's a new guy. Welcome. You're expecting the liquidity at 285 to be taken. 285 to be taken. The liquidity at 285 to be taken. I'm not sure just yet, but yeah, overall I'm still bearish. Yeah, we're eating through this. I want to see it get below this candle here now and close below this mean threshold. Otherwise we have big back inside this little range here. We could be hitting just a rejection block and then coming back into this order block above us. We're in a tight little range. So I like the fact that we're chewing through this now into rejection. Now get me a nice body pop below that. Yeah, I like that. Yeah, that's talking. Now y'all talking. Don't wick me. Don't wick me. Don't you wick me. Give me some body now. Four, three, two, one. There we go. There's a body. Trade back up into it. There's the low. There's the low. Away we go. Now you get a little, if this forms a little fair value gap, look for a trade back into here. And then you look for the range that you're creating here. If this ends up being a swing point, we have a premium array and a discount array. If that ends up being a fair value gap, right? And then we also have an equilibrium array. Again, if that happens, we'll see where this candle ends. It's still got 20 seconds. It's banging off of that. See how now we've drove through that inversion, pop and hit it. Now you're looking for it to continue on the downside, because now I'm definitely bearish, and yes, we're running for the 85 range. Now that can run back up into here and here. All that would be fine. See, there's your fair value gap. discount, equilibrium, premium. Start driving. We can still get a run back up into here, here. Look at your range now. Now we've extended it. That's not our range low anymore. This order block's now validated, so I'd like to see this continue going down now. Lewis, thank you very much. Learning a lot. Then about liquidity. Hi, have you ever tried this market vision on 1 minute or 2 minute? You can do this on any level whatsoever. OB Trader, what you're learning here is applicable on every time set, every single one, and every asset class, every stock. If you're here on the weekend, if you didn't see the weekend review, I went through all this, some key reversal levels, and I also went through CAM models. I went through a review of the month or the week, and I also went through how to apply this to stocks, to commodities, gold, silver, all of them. Exactly the same. So 2 minute, 3 minutes, exactly the same thing. Julian, have you seen people with bear wounds like attacked by one? That's crazy. Yeah, I live up in the mountains, man. I worked in Banff in Alberta, Canada. I worked on the ambulance there. I've seen a cougar attack, bears. Yeah. I've seen bear kill someone. Not that I really want to get into that kind of discussion here, but yeah, I've seen some nasty stuff. 30 years, you're bound to see a couple of things. If you go around the block a few times. Remember interest rate announcement on Wednesday at 2 p.m. Yeah, we should get some good movement then. So now we see how we're pulling back into that range. Look for premium and a discount. Small little range, but look for premium and discount, and then start looking for what I was mentioning to you before about if we get above the premium and get on top of it, then we're moving back up higher. If we're just coming up to it to tap it with a wick or whatever, and we're still acting below it, then that equilibrium is the point you want to see it break. See, yeah, we've got above this one. Now that tells me we're going higher, at least into the higher part of the range. So if we come down into here, look for this to hold right now until we get back up into a higher range. So look right here. Let me remove this one. Watch right there. Clean this up so you guys can see what's going on a bit more. Strange how it's a perfect fit, hey? Now watch it reacting. It's out of here and start pushing higher. And now you're just looking for a higher PDA rate in terms of premium. Burr, 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 burr. Burr, 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 burr. Look for this guy. This guy here is actually a premium. The discount is just in here, and that's the equilibrium right there. So anywhere inside here or here, this is a breaker. So we're looking for that breaker to get hit. And if that breaker gets eaten through and we find support on this and the mean threshold gets taken, look for higher prices. And now we've got a reversal. This is your reversal pattern. Now I'm bullish, and I can change my mind back to bearish. But right now, you've got a bullish reversal right here. And we've got a body that trades above this spot. You'll see me talk about this a lot on the weekend. We're talking about this. That's a reversal. You're looking to go higher. If you're entering in right here like I was doing up there, If you're wrong and this goes lower and the body trades below it, trades back into it, then close it out as break even. Your stop loss will go here. So this is your fail safe. That's just for a quick ripper that goes through you. The fail safe is there to protect you. So this one here, you're going low. So now right now, because we're breaking into that, I would go slammo and I'd move that right up into break even. Because I'm in a small range here, so this could be it. That could be the high. If that trades back against me, I don't want to take a loss. So that's how I would back this up, just because we're in a small range and we're counter trending something that's clearly looking like it's coming down, right? So again, that's how you protect your stop loss. If you're on the wrong side. If you're on the right side, that'll climb up above that, find support there, and as soon as it gets above that high, you move up behind this one, because this one is the next reversal. If it comes back down, pops through it, comes into it, you want to be out, because now all of a sudden you've got a change in direction and we're on a premium. See how we hit the premium perfectly there now? And now we're reacting off of it. So if that's it in that run into that range from here to there, you should take off a piece right there. Now for you, you might say that is 0, 1 to, that's 12 handles. Right there, in 2 minutes, 12 handles. Premium discount. Once you understand that it's going from premium to discount, like you couldn't have asked for a better exit right there. But some of you may be aiming up here. Some of you may be greedy and going way up there. To me, that's, again, it's not greed. Sorry, I apologize. It's not greed. It's just like you're overshooting your arrays. This is the limitations you're in. Work within your limitations. Grab your 12 handles, take a chunk off there, move to break even. At least you got 12 handles out. Now if it comes back and takes you out, you're out. Right now you're still not above that premium array. You're in the middle, near the middle, sorry. There's the 50%. You've come back, hit it. That's a nice sign. Now start driving through it. That means this level of discount array, you found support at it to continue to the next level array. So you want to see, you're actually stuck between these two right now. You want to see this one find support to go through it, and you want this one to find support to come back through it and clear out the lower side. What one do you want to be in? If you can argue both sides of the market, what does Michael say? Move to the sidelines, because now you're in this consolidation. What do you do? What do you do? And you're right in the middle of a range. No different than this if this was day candles, and you go, no, there's nothing, I can't see anything in here. There's nowhere to go. We've got some support off that, but we could be hitting up in here today. If that was day candles, that's how you'd be analyzing it. You'd be like, no, there's nothing in this market for me today. It does look bearish overall. We have got a nice reaction off of that. If that comes back up here and finds support at that level and climbs up on top of it, I'm out. But you'd have to wait for a whole day for that to get through that. And then the moment it comes back through it and touches it, you'd be out. If you're going short there, you want to get short right to the point where you want to be your exit point as well. So it's a backup play. Not only do I want to get in there, I want to get out there if it comes back and finds support at it to go higher. So if I'm wrong, I've got one little backup plan, and that's hopefully that the next day it comes back and tags me, I can get out if I'm on the wrong side of it. And it doesn't take my stop loss. My stop loss is sitting up here. If it runs through me real quick, that's what your stop loss is for. If your fail safe is right here, that'll get you out if you're on the wrong side. As you saw this morning, it would have squeezed me. I would have still taken it out if I would have seen it coming that high anyway. So, but that was my reason to get out. It didn't work overall. If you would have left your stop loss there, it would have squeezed me getting tight, and then we'd be into some huge profits this morning. Remember interest rates. Terry's Wednesday. Yeah, FOMC. Chris Alley, hit the like. 41 likes. 71 people. This is crazy. I couldn't even, back in the day, I couldn't imagine 71 people sitting in here. This is, 72 people. It's awesome. Absolutely awesome. I appreciate it. I'm always here. I'm Al Musi. I connected with the spouse's laptop to execute on my PC and I comment on my phone. Oh, you're awesome, Musi. Thanks, buddy. Obi Trader, thanks. Julian, oh man, do you consider the moving averages a good visual aid? No, absolutely not. I do not believe in moving averages. I've built bots around moving averages. Michael, I know, uses 18 and 9 as a moving average. You can go to the ICT index to look for his take on moving averages. If you like, and it's not a moving averages are not a big thing for me. I've tried so many calculators. I've spent weeks and weeks developing bots around moving averages, and it was a complete waste of time. I don't use any retail indicator. As you can see, all I'm making is my own boxes. The charts are clean, and I use a fib tool, boxes, and this neat little one over here. I kind of enjoy this other one, this guy, whoever this is, MK, whoever made that. I like that indicator because it kind of gives me an idea that if I'm in an Asian range, or I break the Asian range high, I tend to come back to the Asian range in London to hit it and go higher. And here's a great example. So you break the Asian range high in London, you come back and hit it right there, and you go higher. So I like looking for that. The same as the Asian range. If you go below it in London, come back, tap it, and then drive down into New York. That's another, just a simple entry tool, but man, it's magic sometimes when it works. And you look for all this kind of stuff in here to confirm that too. See how we just come back up inside that order block breaker right here? The breaker is a senior candle. It provides a level of support. This is just inversion, or sorry, this is just a fair value gap. A reclaimed fair value gap. Not an inversion, it's reclaimed fair value. We haven't gone through it. This is not. This is a senior array, and it's an inversion. I call it a senior array. Michael doesn't call it senior array. I just look at that and say, what level of strength can I give that? Well, that's a support level, so I want to see that come through here, get a level of support, and start pushing through. We've come back into our premium array. Now we want to drive down further. That one held price. So right now we're banging around between these two still. You see that? We went up, hit it, come back down, tapped it. Went into it, hit it, come back down, tapped it. So we're banging around between premium and discount. Now the algo's got to start making a move. We've got a consolidation. CAM people are getting ready, licking their lips, getting ready for a CAM model entry here. You wait and see. Abs. Best indicator of all is the carrot. Where's the carrot? Oh yes, all the new people haven't seen the ThetaWave carrot. Let's bring in the carrot. Bring in the carrot. Where do we want the carrot? Those of you who are new, I'm going to give you one of the greatest secrets that the markets, that retail and everybody else doesn't know. I'm going to share that secret with you right now. The market is a vegan. The market loves carrots. We tend to pull the carrot when we want it to go in a certain direction. I want to go long. Laugh my ass off. He wants to go long. Well, you know, you're right. This is the swing to go long, but if you lose it on the downside, don't forget, if you're going to go long here, you want to see this level provide a level of support. So right here is where you use your fail-safe. You get ready, because if it trades below and it closes below, sorry, there's a carrot. It loves carrots. If it trades below it and doesn't tag your stop loss, like there, now you want to get out right there, because now it's saying, I'm coming for the carrot. I'm coming for the carrot. If it trades back up into your opportunity to get long right there, you close out right there. Because now she's going to come back. It can come all the way back up into that thing there, but you're going to see this roll over eventually and come for the carrot. I'm just going to go for a bathroom break. It's kind of like when Lori goes to the kitchen, I go to the bathroom, and the markets tend to move. So I'll be back shortly. There you go, my friends. Loves the carrot. I kid you not. It's a vegan algorithm. It loves its carrots. Not just any old carrot, but a good old tasty digital carrot. Now, aren't you glad I told you to get out when you did, so your stop loss wasn't taken? There's where your fail-safe works. And your entry, if your entry's long here, that's why it works. So if you trade below it, as soon as it comes back to it, or if it trades below your entry, your open again, which it did right here, I would just close it out, versus your stop loss getting taken here. You're literally saving your account. You can use it or not. It's entirely up to you. I'm just offering up some things. Y'all can try them. If you don't like them, y'all just toss them aside to the right, to the right or the left, and you have done with it. That's my best southern accent. How's that? Is my buddy Terry still around? Terry from Brighton. You still around? Oh yeah, Terry's up there. Hello, Terry. Terry used to live right down. He lives right down the road from me. I was born in Portsmouth, England. I was, and Terry's down in Brighton, right down the road. Oh my goodness. So you see how that daily breaker and that little price area we were looking at right there was a key level to look for, and it literally hit right off that 4-hour inversion or 4-hour fair value gap or whatever it was. I think it was a fair value gap, SIBI. And now we've got just this beautiful, that's the thing you're looking for right there. Stop loss goes here. If you use my method, you're sitting on the sidelines like me, waiting. Here's another swing point right here. Not this right here is the same thing right here. Body gets below it, and then you go dirt, 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 right there. Boom. Right on the money. Short. This isn't a swing above anything, so you can't use that one. They're delicious little entries. If you see them, they're really delicious entries. And this one here, body breaks above, you get to it, and you're just running for the high, an array inside the range you're in. You got to understand it's just inside the range. So yes, this is a reversal, but it's just a reversal to get it back inside a premium, inside the range you're in. So it runs right up to the premium, which we talked about, and now it's rolled over. And as soon as it breaks through that, we're like, no, we're going short now. Get out, go short. You're aiming for here. Don't forget, you're aiming for the nearest PD array. As soon as it hits that, move to break even. So you've paid yourself, and there's plenty of other minutes. We're on a minute chart here. There's plenty of other setups you can get in. So this right here, same kind of thing. We've got a swing below a low. You want to see a body get above that, get on top of that, and then start pushing for these equal highs if we have a reversal happening. So you're constantly looking for these reversal setups, inversion fair value gaps, finding support at these inversion levels, and just watch them on the minute chart, and you will see that these are starting to provide you a level of support. Look at the range you're in and say, is this a discount array and a premium array sitting up here? Then likelihood I can find support at this, run to the premium array. Now do we give up that and come back down again? And all this was just a run up into a premium to go offer prices at a lower. So here we get a close. If we get a close above that, so 10, 9, 8, 7, 6. Now you look, is there another one of these above you? Nope. There's these equal highs above you. Now we've closed above. Same kind of thing. If you're going to get in, you put in your long order right here. If you're going to go long, you could go one there, one here, and you're waiting for, and your stop loss goes down here, and the same kind of fail safe. If it fails on you, get out before your stop. And when you're this close, chances are your stop's going to get taken. But there's your first entry. So we'll just put sticks here, because it's up to you guys. Make your decisions. I don't tell you where to make your trades. You decide for yourself. Entry 2 and clone entry 3. Midpoint's right there. Don't forget your overall run is down, so you're counter trending this overall run down. So if this starts shooting up above here and finds some support, then quickly, as soon as it gets above that, move your stop loss into break. Well, they haven't hit that one. You can't move to break even just yet because it can come down and just tap you. So whatever swing happens in here, look for that next price leg up into breaker. And we've already eaten all the way through that breaker into the rejection block already. So to me, this hasn't got a lot of strength. So we might have a push all the way through this. It depends on what happens at this point right here and whether or not this gives way. We want to see it can come all the way down into here and start giving us a lift off. So watch this as a reversal right now. There's your next one. Victor, thanks for popping into the show yesterday. I really enjoyed having you come in and talk, you and David. It was much appreciated to have some people to talk to and hear some voices. I'm going to do another one in here just so you guys can see what, let's just drop this to 1. Okay, I'm going to put 1 in here. We'll put our stop loss right here. So then what we're looking for is, if it fails, I want to show you the failure again. If it fails, there, it taps us in. Now you want to see us just snap off of that and go back up. You don't want to see this. You don't want to see that waffling there, so start going. Now if it breaks through this midpoint here, I will bring this right up to stop loss to break even, because there's no reason it should have to come back down here again. It's already revisited the bottom. No reason to come back to the bottom. Look there. So now I'm moving right up to break even. So if the trade doesn't pan out, I don't care. So it was a break even trade. See? If that turns out, because there's no reason it should come back down here again, unless it's coming back down to drive for lower lows. If you're bullish, then it's going to have an intention to get the hell out of here. Waffling around in here, not my liking. So you trade what you want, not be at the mercy of the markets. See? Didn't cost us anything for a trade that we were hoping it would work. If it didn't, and we're counter trending, so chances are we're going against the grain, but we didn't lose anything. But if you did catch this reversal, right there, you caught the mother load in profit, max load profit. And right now you'd be squeezed, because now if you're waited for this candle to drop below and go, okay, as soon as it, now right there, if it comes back to me, I can get out. If it, now you just got taken out. See, that would have been a full stop loss taken. But I saw that the logic was, hey, look, we tapped this twice. When we're leaving now, there should no reason why it should come back here again, move up against break even, and save myself all that stop loss that I had potential to take there. Hopefully that makes sense to you guys. It feels the carrot. It feels the need for carrot. A little beta carotene in its day. Yes, matey. How's it going there, Terry? What's the weather like in Brighton right now? You should be starting to warm up there. There's a lot more rain still. Not a bad southern accent. Said a man from Louisiana. Wow, thank you. So the takeaway today, work from the PDA to PDA on the time frame you work with. Yes, Terry. Yes, my friend. Stay inside. Look at the PDA inside the range that you're in. Like, see this little range we're inside right now? What's the premium? This is, as soon as that breaks that candle there, which it just did, that becomes the down candle, and the up candle, unfortunately, is this guy here. That guy's inside him, so you have to take him. There's a little tiny imbalance sitting up there too, so we do have this guy, but he's inside this guy, so you can't really use him. So if we start to run through him, look for a premium array up here, which is that guy. So you're stuck between here and here. If this rolls over now and goes through this candle's mean threshold on a close, then we didn't even need to get up into 50%, because pull your fib tool from high to low here. We've already hit over the 50% right there. And down we go. Don't forget, we still have that inversion on this side, so you have to pull this over here. You're constantly moving your candles and your boxes around to find levels of support. Let me get rid of all my drawings here. Remove drawings. Let's get our carrot back out here. So you're inside this one still. You want to get a good body above this. Well, a body really puts you in a very small range. So look up here. Wait for it. Boop. There you go. So now you hit the premium array. Then you look for the body, which is right there. It just hit the body. And now it's coming back into the discount array. See how literally one candle, you hit the high, and then you hit the one array premium and discount, all in that one candle. Ding, ding. Now you're like stuck. So you're in a small little range here. So you look for next. What's the next thing? The next is the mean threshold to mean threshold. Now it can skip through that and go to the rejection block and then come all the way up to the rejection block, or in here. It's always going from premium to discount, premium to discount. So it went premium all the way down into discount, all the way back up into premium array, discount array, premium array, discount array, premium array, discount array. That's what it does. It goes back and forth in between these premiums and discounts. And when the discount gets taken, it creates a new range that you start to look at. Hopefully that helps. There's a 15-minute fair value up at 248. There is a fair value gap and a 15-minute right here, 248, he says. From there to there. Indeed there is, my friend. Indeed there is. We want to see this guy get close below this, come back up, find some support at this right here, which is also the is that not the hour open? The New York Open midnight candle? Yes, New York Open midnight candle. No, it's not. That's the daily chart. What the hell is this thing? 9:30. Oh, it's nothing off mine. So look for this consolidation, break through to the downside, then the 248. Agreed. I do like the way you're looking there, Follow the rules. The carrot is calling it short. Yes, be careful. So now we're going through our mean threshold. Watch this. Do we close below this? Or are we just running for a rejection block? We have nothing in here that really supports a reversal, except this guy here, but usually that happens down in here, that on the swing. That's where we wanted to find support off of that to go higher. But the moment we saw it tippy tapping around in there, forget it. It's running these lows out. Now, where in here do you find anything that would support an upside price? We've just run back into this range, all the way back up into rejection block. So if we blow through this one, you have a higher range that you have to go to next. It says look for a silver bullet. We're in lunch hour here, right? So we're consolidating. So that you may not get the high there, and that's it. Once again, we prove take your damn rejection block and pay yourself. Because if this rolls over here now, comes all the way back into the range and goes from premium to discount, rejection to rejection inside an hourly. Okay, forget that noise. It just took it out. Shut up, Darren. What do you know? So equal highs here. Back into order block, consolidation, CAM 1 model, CAM 2 model. Look at this inversion again now. Draw it straight out and say, if I close above this now, see how we've just closed on it, opened on it, and going higher? If we close back on it again and find some support, then look for higher prices. This could be the swing, and now we're looking for a run back at 12 o'clock. You'll typically see the 11:50 time get taken out at lunchtime, and then a return back into the range. So look for this to provide a level of support now to continue higher. You'll see how we've closed above it, and we've come back and tapped it right here with perfection. Now you want to see that leave. I'll put the carrot up here. So those of you who wanted to go long, I can't remember who it was who said they wanted to go long. Now your long begins to appear. We've swept the lows at a time when you usually get the 11:50, 11:30 takeout. Happens. Find some support. Now I'm bullish. Even though you're in this trend, I'm bullish until proven otherwise. And it loves the carrot. Lunchtime. Of course. It's lunchtime. It likes carrots at lunchtime. You're out of here today, Derek? Okay, buddy. Thanks for popping in. I'd love to have your scrambled eggs right now. I'm hungry. I'm living on coffee and water. Have a good day. I hope you get a good golf game in, my friend. Stanley, close your eyes and short NQ. No, don't close your eyes and short NQ. You've got the break. We've had a reversal happen, so you want to stay on the reversal now. So until you get it proven otherwise, we're going bullish again. Matt's 0 degrees in Sweden, Stockholm right now. Stockholm, Sweden. 0 degrees. What are we sitting at today? Let me see what we're sitting at today. It's us against Sweden. Ooh, we're like roasting hot today. Ooh, it's pajama weather outside. 7 degrees today. We're warmer than you guys over in Sweden. You got to come to Canada, get yourself a tan. You stand in the snow and get yourself sunburned. Cold day in Pennsylvania. No golf this week. That's got to be totally disheartening. Derek's just going to start swinging this club around the house. You just got to get in the action. Don't let your muscles stiffen up, bud. Short term, it could go higher to 18,333. Yeah, absolutely. That would be an upside objective, but I could say it could go till rejection block, turn around and come back down. Right now we're bullish, so we're going to keep going bullish. Nothing tells me that we're going bearish yet. We now have a propulsion candle above this high. I want to see that get up there, come back, find some support on this, and continue pushing higher still. Run these old highs out, take out that breaker, and then keep running higher. But there's a lot of PD arrays. Don't overshoot your PD arrays. If you're in this one for a long now, right off of there, I'd slam that sucker right up into profit. Pay yourself a piece here. So you guys can see now when the markets change directions. I'm bullish here. Oh, no, I'm not. I'm bearish. Oh, yes, I am. I'm bullish. Consolidation. Now I'm bullish. So you saw the reversal happen right there. Tipped its hat. You got in. You go long. You're aiming for the first objective. You want this to provide some support. There is a small little fair value gap down here. We also have a breaker. If it returns to breaker, which is this old high right here, and continues for the carrot, great. I'd love to come and get some lessons from you, Derek. Teach me how to do some golfing with my fused back. You don't have to say, Darren, you can't compensate. You got to twist to hit the ball. "38 degrees in Brits, South Africa." Is that where you're at, Lewis? 38 degrees. Wow, that's nice and tasty warm. I love the heat. That's why you pay yourself at rejection blocks, people. You may not get the high you're looking for. Now your profits are getting eaten up. Pay yourself at rejection blocks. You don't get the high. Now you're like, ah, dang, look at my profits getting eaten up. Well, if it gets back to your breaker, you may still get your profits yet. So look at this breaker. You draw that out in time. And if you lose the breaker, then I'm saying you're dipping down into this guy here again, which is this breaker. Breaker. See how we tapped on it? You want to see that kick off of there quick now. Like a bunny, run for the carrot. Don't come back and revisit. Get out of there. I guess if I knew exactly what time our targets would hit, I would not be here. This is so true. This is so true, my friend. So true. They're really starting to dig into that breaker again. See this range here? Ask yourself, what premium and discount array would support my price to go higher? That sucker right there. If I eat through that, that's the next price leg up right here. But that has to support price. So if this is going to be your price leg from here to here, and you say to yourself, well, you know, I'd like to see that hold price now. I don't want to see the next run. Let's say we're looking for follow the rules. I'm going to call you the Pied Piper. Follow the Pied Piper. Follow the rules is too much to say, too much of a mouthful. If we're looking up here, or we'll start from here. No, we'll start up here. I like that one better. Right back into this mean threshold for the next price leg up to close in that 3834 or 8334. 4. If we run through that, that's how you kind of reverse engineer your, if that's a price leg. If that's the low, if this breaker holds price, you can expect that upside right there. I fill in this fair value gap and start to look at digging into this one. If this one holds right there, and this is the next price leg up, look at where it's going to go. Right to the money, it will fill that last little piece in right here. See that? Let me just click off of that so you can see it. Now, is that crazy perfection or what? So 18,341, if that the low holds. So that's how you kind of reverse engineer, where you think, okay, this is where I think price could head to. Oops. Turtle soup. Turtle soup. If we lose this low, then this whole price leg has to get readjusted, and that may be the upside objective. Unless this here, we want to see this one get taken, come back in, find some support at it, because it's a little inversion right now, or sorry, a little fair value gap that's being reclaimed over and over again. You want to see that get on top of it and start pushing up higher, get through that order block. Otherwise, you're back into this range again. And that's your downside breaker. That's your support breaker. You want the support breaker to hold before the downside breaker gets taken. Because if this loses and we start digging deeper into this, then the rush for up high is, we're back into that lunchtime consolidation again. So I still want this breaker to hold price, and we can start aiming for higher the next price leg up. So this is where you're just going to see it waffling back and forth. And this isn't an order block yet. That's the only one that's valid. So the next downside candle that supports price, because we haven't got above that. Oh, we have got above this one. We're digging into the rejection. Dig, dig, dig. Now you want to start pushing through here. I like this one and this one. Get above that. Get some padding now. Come on. That's just activated it. You want to get a body above though. Come on, get some carrot. I'll give you some food. It's saying right now, I don't want your damn rotten carrots. That carrot's been sitting out all day. Order block. Literally, you're stuck now. Just because we validated it right here, you're in between these two. And they're literally overlapping each other. So that's why you see it just sitting here flat right now, going, I got to go somewhere. So it's looking for further arrays it has to reach back for and either extend its range higher, or has to run back into this range here further and go through this mean threshold of that candle. See how it's just bounced off of that guy? And it's bounced off this mean threshold of this one? Make up your mind. See how it's just tapping it, tapping it? Where do I go? I'm here. I'm here. I'm stuck between these two. I've compressed. Now I've got to bust out. Come get you some carrot. Oh, no, I have friends with fused backs, so we can play golf without hurting our backs. Ooh, good. You can teach me some of those techniques. I used to be able to crack a ball 300 yards. Back in my youth, 305 yards, I think I got a good one once. I'm just one of those grip it and rip it kind of guys. And then I say, see you later, guys. I put on my bushwhacking clothes and my mosquito repellent, and I disappear into the trees, and I come out with a bag full of balls, which I think is very useful because it means I've really paid for my golf course fees by collecting balls that other people have launched into the trees, like mine. And then I pop out of the trees back near the fairway, and I go, all right, let's putt this baby and move on to the next hole. Lewis, oh man, I can't wait to go to South Africa. My wife taught down there in Joburg and Zimbabwe, and she loved it there. She loved it. And we got some friends that work in one of the major schools where the president, Mugabe, when he was president, his kids went to the school that our friend is the principal of that school. He's the headmaster. So, yeah, we want to get back. I want to get back down there and see Zimbabwe. I want to see Africa. It's a gorgeous place. 12:30. Yes, we're looking for the Crazy Ivan. We're going sideways. We're going to bust out of here. What are you cam model people looking at? Are you a bunch of salivating puppies right now? Just looking, chomping. Look at the meat. Look at the meat. Chomping at the bit. No frost in winter. Very seldom below degrees Celsius. Yeah. My wife was saying that Zimbabwe's got some of the best all-round weather, like consistent weather all year round in terms of temperature. It's lovely there. Great place for me. Lights, camera, action. Congratulations, D. What, did I hit 500? I got 497 here. I haven't refreshed. Standby. Oh, Nelly! 500! Oh, I'm going to have to put my little face on here. Oh, I'm so nervous. What if they think I'm ugly? Oh, goodness. That means I've got to... You guys don't want me to see my face now, do you? Because I'm in my pajamas. I got bed head and everything going on. Not a nice debut. Trust me. So deeper run down into that range again, right? Look for that. See that old high right here? Tap. Now we're digging into the breaker. It's a senior array, so you got to ask yourself, is this senior array going to give way? This is why, look at that. You still didn't take out the highs, so you better have paid yourself a discount or on the rejection block because you still didn't get your highs taken. You see that? Now all your profits are getting eaten up if you entered in off of this candle here. You're underwater now. So if you didn't pay yourself there and slam your stop loss up behind you, because now you've hit your array that you're looking for, you've lost. Not only have you entered in, had profits, now you're underwater, and if your stop loss is sitting down here, you're really getting squeezed now. You've just come back to the breaker, so you're hoping you get some kick off of that. Look at the range. That's probably 62% or more optimum trade entry for a continuation. Let me just look at this to see our little template. There's 50% right there. Bodies are respecting that. All right inside that inversion. Now you want to see it go. Find some more support on the top of that. Right there. And get the hell out of Dodge, my friends. Get out. That's your optimum trade entry. Well, I don't know if that's 62% or more is your optimum trade entry, but you can see it's come down into a discount array before again running higher. Consolidation. So we have a cam model 1, 2, and 3. So this is your 3 in here. So you're looking for this to run above, come back, get a cam 1, a cam 2, and a cam 3 in here, which would probably put you right back on that order block again to run higher. Let's see what happens. This is manipulation. You want to see a distribution higher now. If it doesn't, if it keeps rolling over, then that is going to just build in some liquidity for later. So you have to ask yourself now, here's your premium array. We have not broken above it. And a discount array we've got down in here. I guess this, it would still be this one. We'd have to break below this to go change your mind again. We're no longer bullish, we're bearish. So your bullish opportunity to grab some quick pips for yourself or quick handles was from there to rejection. And the fact that it's coming back and eating into this again, not a good sign. We can run all the way down into this candle here. Breaker. Mean threshold is just below. And again, you change your mind the moment it trades below it. See why if you put your entry in here to go long, you're in on it long. Well, you would have got in on it long there. You would have got squeezed out there. And then all of a sudden it run through it again. So you get long right there. You take your profits out there, move to the sidelines, or bring yourself right up to break even. Comes down, takes you out. You took a little bit of profits and move to the sidelines, and you wait. And you say, ooh, good thing I did, because look, now my stop loss, which is either sitting down in here, if you're sitting on that one, would be here. See how we close below it? Get out right there. Now you're bearish. You see how we've traded through the mean threshold of this candle? Again, you could run all the way back up into here. Might give you a chance to get out. If your stop loss is sitting here and you were there, you think, oh man, I might have run to water, getting squeezed. If it breaks that low again, get out before your stop loss gets taken and consider that a loss. But far better than a full loss. So right there. You get out right there, because now if it rolls over here and keeps coming back down, that's what you got to fear. Hasn't even come to rejection block yet. And notice like array to like array. Rejection block to rejection block. All the way back down. So then if it pulls off of here and comes back inside again, consider rejection. Premium array to discount array. Like array to like array. Sorry, like array to like array. Inside that range. We took it out. Now come back into this side and we should see the rejection block get tapped. Just coming back to that. Just give this one more knock on the door and come down into our little range here. Off-grid 500 subs. Thank you very much. I think that's hit a milestone, the minimum milestone I need for YouTube to start pushing the algorithm a bit more for my for our community here. There you go. Now your rejection block's been hit. Come get you some carrot. Bulawayo. Come to Bulawayo. I would love to come to Bulawayo if I knew what the hell that. Do you guys have planes that can land there? I'll take it. I'll jump out of the plane and kind of just parachute in there. Tino, that'd be awesome. Cupertino. Happy trading. Clocked a 500 sub. Yay! That's awesome. Wait till I tell my parents. My parents are going to be so excited for me. I was just telling them the other day, I just broke 400. like just last week. They're like, I'm so proud of you. I'm so proud of you. I'm like, thanks, Mom. Thanks, Dad. They're 80 years old. They're so cute. They're going to be so happy to see that 500 people now. We're going to have to start using my garage. We got so many people in here. We'll have to hang out in the backyard, light up the barbecue. We all sit around, big screen it, do some trades. We'll all sit around having a barbecue. Derek can do breakfast. John, I haven't seen John in here. Well, John Doe, our pizza guy, Italian restaurateur extraordinaire. He makes a mean chicken tikka masala. Thank you very much. You should visit my home in Zimbabwe. Lovely country. Oh, I would love to. My wife can take me back in there. That'd be awesome. I would love it. We're definitely going to go back to South Africa. We got some friends there that she's going to want to visit, and I've never been there, so I would love to go and see a safari. I'd love to hang out. I'd love to learn more about the culture there, more about the people, and yeah, I think it'd be awesome fun. What is this? I don't know who you are. Jansbury. You've not been here to Kenya? We have the best weather. Ooh, Stanley. I got all these awesome places I can come visit. Got people I can go hang with. I have a barbecue. I'm supposed to try. My wife says you got to try tripe. Is that a good idea? Have you guys eaten tripe? Or are you all laughing right now and giggling? You've been, Lewis. Your channel will definitely grow. I hope so. I hope we can help out more people. If it helps you, then that's great. I'm happy. You know, I've justified my existence. If I can make somebody smile in a day, or I can give you something that helps you move to profitability, then, you know, that's my goal. I don't do my paramedic stuff anymore, so I've got this need for service, my need to help people. If I can't save your life, then at least I can help you save your finances. I mean, you can help you grow, and you can just spread that forward and help other people out along the way, then I've justified my existence. Look for this price leg now for a run, another run leg down. Look for this order block to hold price. We want this inversion to hold it now. If we start trading above here, we've got another swing point and another opportunity to run back up. So look for this here. I'm going to move this one over here now to here. If it trades above that, find some support at it, you're bullish again. And you're looking at this range here. So look at that order block there. You want to get through the mean threshold of that one and get up on top of this stuff again. So what I mean by like array to like array, we have rejection block all the way down to rejection block and then back into the range again. Now you want to see this give way though. If this doesn't, and that doesn't get high on top of there, then you're still rolling over and coming back down. Then it becomes a new price leg. So I'm going to turn the carrot sideways because I really don't know which direction it's going to go right now. So when it's sideways, that means I don't know. I'm just looking for this. And this is where you study price action. Inside consolidations like this, you'll get better and better understanding it if you can stay on the horse. So far we're staying on the horse, we're calling it, and it's not shaking us off, even in a consolidation. How many other people are spending their time watching a 1 minute chart and studying price action? Michael says get in there and study price action. He's not kidding. Studying price action isn't coming back every hour and saying, oh, where am I at now? Did I get my stop loss taken? No, I mean, like, get in here in a 1 minute and study what arrays that it's looking for. When you get it cleaner, I tell you, everything else will start to settle in on you. You're definitely helping people, man. It's impressive what you can do. Thanks, Julian. I appreciate it. And it's not what I'm doing. I'm just kind of using my powers of reading ECG strips for 30 years. I can look at your heart. I can tell you what part of your heart's dying. I can tell you what blood vessel inside your heart's dying just by looking at your ECG. I can tell you if it's anterior, circumflex, posterior. I can even tell you what part of your SA node's going, or your SA node or AV node's going, just by looking at your ECG strip. So this is just another ECG strip for me. I like it. I love it. It's like reading the financial pulse of the planet. This is the heartbeat of the NASDAQ right here. Thanks, Hans. I appreciate it, man. Thank you. Congrats on 500, Darren. You just have so much patience. I tell you, there's a... here, I'm going to go to my paramedic thing again. You talk about patience. There's a time when, as a medic, you get your patience for 60 seconds or for 9 minutes is the most terrifying 9 minutes you'll experience when you give a drug called adenosine. When people have what's referred to as a supraventricular tachycardia, their heart rate's racing out of control, and you're trying all the different maneuvers, vagal maneuvers and cold water and getting them to bear down and blow through a straw and all that other stuff to try and slow their heart rates down, stimulating a vagus nerve in their neck, you know, carotid sinus massage, whatever you can, right? And none of it's working. Then you have to give them this drug, which is like a chemical defibrillator. You inject it and you literally watch their heart go flat for about, it's got a half-life of 10 seconds. So you fire it in and you wait, not 10 minutes. It's 10 seconds is this half-life of this drug. So you literally pound it in and you slam it in with a chaser, a saline chaser, and you watch the heart just go flatline, and you go, I just killed this guy. And then you wait. As soon as the drug wears off, all of a sudden the heart rate kicks in again, and you suddenly see the heart start back up again. It's like, that is the scariest 10 seconds of your life. So you talk about patience. You want to see a paramedic start to pucker? You start to see us rising up in our seat because our butts are clenching when you give that drug. That's always a fun one. And patients hate it too, because it's like, it literally feels like I'm just giving you a heart attack. You feel like, oh my God, the whole world's passing before you. Like, hang on, it'll pass. And hopefully they don't pass out. But sometimes they're out. And then they regain consciousness, go, oh, I hate that. Don't ever give me that thing again. It's like, well, no, your heart's slowed down now. It's under control. And then you go home and you wipe the sweat out of your crack of your butt, because I tell you, those ones can get you quite nervous. It's the best channel to learn price action. It's just open your mind when you're studying ICT. Yeah, I hope this helps you understand price action a little bit more. It's everything Michael has ever taught you guys about arrays, PD arrays. Like if you're starting out and you want to study PD arrays, you want to go to that chapter, like study all the stuff that he talks about in his core content, and don't go paying anybody for this. I'm giving it to you for free. Michael gave it to you for free. If anybody's charging you for his stuff, they're stealing his stuff and they're trying to make money off of it, don't pay for it, man. Go study it on his core content. Come in here and we will help you put it to use. We'll help you study every minute watching price action. And we haven't grown to 500 subscribers by studying a 1 minute chart and being full of shit. Sorry, pardon my French. Right? If I was showing you a minute by minute chart, you would know within 10 minutes whether I knew what I was talking about. And here you are, 59 people still in here. You can still see it moving from array to array, minute by minute. If that doesn't prove to you, and I've been doing this show now for 7 months. I started doing this. And more people are coming in and they're watching price action on a minute by minute chart and us calling every candle minute by minute. Where's it going? What's it between? Study this. Look at that. If it finds support here, look for it to go here. Within half an hour, you could say, this guy has no idea what he's talking about. If this wasn't an algorithmically driven. These aren't random candles. All this shit was not random candles. This was all doing its thing. We were saying it right here where we're saying it's running out of arrays. It's going to have to bust out of here. It's going to have to extend down or it's going to have to extend up. Inside a range, chances are it's going to come down. There's her breaker. It ran through that into rejection. Rejection up here. It tipped its hat and said, I've hit a rejection block. Where would be another rejection block? I would go in a discount array. Ooh, look at that all the way down here. Now come back into that range. We've got a discount and we have a premium up here. You see this? See that premium? Watch it. Watch this area right here. I'll put Mr. Carrot up here. Because who doesn't like biting a carrot from the side? Premium, discount. Pop above it, come back, find support. Now you're in between these two, premium array, discount array. Pull your fib tool in here and see where are you. Sorry, premium discount. We're just above into the optimum trade entry to go short. Or are we still aiming for a higher premium array? See how this has come back down, just dipped below into this range? That tells me we got more upside. You don't usually see it just hover around. Oh, mind you, it's sitting right on the 62% there. See how the bodies are respecting that? That's definitely in a premium range now to roll over and come back down. But look for like array to like array, or like array to like array. See the discount? Boop, just popped into the discount, inside that discount array. Now run to a premium array above you. Like to like. It's saying, is that fish or is that a carrot? I like carrots. Derp. See how we're like, this candle here, you validated it here. And this candle here, you validated it there. I got to get out of here. So, discount array. We have literally that guy there pops up inside the rejection of that one. Then this one comes down to the rejection of this one. So extend down back into here. And again, we want this to provide a level of support to come back up. We've got consolidation. Cam model 1, boop, run back up into a higher array. Cam model 2 would be the mean pretty close to the mean threshold of that. Stop loss would be down here, and you're looking for a run above these old highs here, which would bring us back into that higher array again. So let's just see what happens. If it trades below 50% of that, trades back into it, get out, because it's probably going to run below that. So let's say this was the stop loss. And either run straight into your stop loss, take you out. Here's the rejection block again. Where does it close? Ten, 7, 6, 5, 4. There. It just cleaned you out. You got consolidation over the top of themselves. There's nowhere to trade in between that except for this. So now we've got this downside, and now you've switched. We went from long, we got into a premium of this array. We didn't hit that higher one. We rolled over and broke below here. See, that came back up inside it and start looking to go lower. Take the lows. Changes up right there. You knew it's changed its mind right there. Came back up, get short. And here we are starting the next macro at 1050. You see that? See this, 1250 I should say. You're seeing that spooling happen right at 12, the macro beginning. You see that? And it came right back into where you wanted it. Breakthrough. Oh, now I'm going short. Start spooling the very next minute. And it spools low. Amazing! Oh, I think that's going to be it for me. It's been fun. I think I want to get outside and get a little bit of sunshine. We're supposed to be getting a whole dump of snow coming our way. So now we're looking for some more downside action. So we're going bullish, now we're going bearish. Back into our continuation. Now anybody who's in that trade that we were calling for earlier this morning, that one that I just got out of, if you're still in that, you're just chuckling like crazy. You're having a good old time. Like that guy right there. Swing point, run back, tap him, short. You're really killing it good today. So that was not an upside objective. Snow. I live in Canada. I'm up in the mountains in Alberta here. That's where I am. We're expecting a whole freaking dump of snow coming in this week. It's nice and warm. It was like 12, 13 degrees there yesterday. Nice and warm. Snow's melting like crazy. And then all of a sudden we could be out with a snow blower blowing 2 feet of snow. We can have these, it's the desperation that kills the Canadians in March. We go, I see the light, and then all of a sudden, wow, woof, you get this huge dump of snow. You go, I hate. It's where we really start to hate winter because you're shoveling your driveway a million times. I sell at the top, a small risk. Good for you, Bohan. Good for you, man. Vancouver up to 20 degrees. Lucas, you're in Vancouver? Sweet. Our kid is in Vancouver. Baron's in Vancouver. Awesome kid. If you guys want to get some graphic design done, see Swoop. See my man Baron at Swoop. He's an awesome guy. He'll take care of you. He can rebrand you, build websites for you. He's got an awesome business out there. The kid's super talented. So, Lucas, wow, it's nice. I get to see, I got a guy out in Vancouver now. We got a guy out in Ontario. We got a couple of Canadians involved now. I love it. We got people in Sweden and Africa. We got people in all over the world now. This is great. I don't know if we got anybody from Australia here yet. It might be in a weird time zone for them. They might all be sleeping. Jeremy, I come from Strasbourg in France. Oh, France. Welcome, welcome. We got friends in Paris. Got friends in Paris that guys teach, at one of the schools, the IB schools out there. This is great. I got all these people I can come meet and say, hey, look, I'm coming to this country. Hey, anybody want to meet up? Let's go for a coffee. Let's go for some local cuisine. Tell me a little bit about yourselves, your culture. Tell me a little bit about your story. Let's meet up, man. Let's share. I want to hear how your price action has affected your read on the market, how it's made things available for you so you can get some freedom for yourself and your family. I can't wait to hear that. I want to hear all these cool stories. So, Ireland. Ooh, got a friend from Ireland. Happy St. Patty's Day yesterday. Our guy who's working on our kitchen, O'Brien is his name. He's a good fella. I love him. So, area 420, Ireland, Kenya, Costa Rica, Iran. Oh, we got one from Iran. Welcome, Iran, my friend. Welcome. France, look at you guys. This is awesome. All over the world. Moscow. Yahoo! Got another Russian friend. What is, it's almost like a French name. I got another Russian fella in here as well. That's great. Welcome, my Russian friends. Look at all these people all over the place. I'm loving it. 500 people. Lebanon. Haiti. Look at this. Lithuania. Man, Guatemala. My ex-girlfriend did some teeth down in Guatemala. The dentist I used to go to, I used to teach CPR and first aid for him. Lloyd Evans. He used to go down to Guatemala all the time and do dental, give away free dental work down there, and he'd help out all these kids. He'd be pulling teeth like crazy down there in Guatemala, helping out people with some bad teeth problems. So yeah, he had an awesome job down there, going to help people out. Pakistan, Serbia. Oh man, you guys are making me smile here. There's people all over the world. I feel the love, people. I feel the love. Love to come visit you, mate. They do not give me a visa. Oh, that's too bad. That's so too bad, man. That'd be nice to have people come visit. We'll show you some good times over here in Canada. We're very friendly people here. Look at all those people. Wow. Impressive. Okay, that's it, me. Now I'm going to shuffle to the sidelines. Just watch and enjoy this nice little slow, steady grind all the way down. We were calling for a run up here today. We're looking for that reversal pattern. What a beautiful reversal pattern it was. And boy, did it ever give us a squeeze. Right to the last nickel, it gave us a squeeze and still kept you in. So if anybody who was in this one this morning and had your stop loss there and held it, I naturally chickened out, but those of you who really held that, congratulations. Like, I am so happy for you, and you've caught the reversal and you caught the high of the day, which is what we were looking for. Hallelujah, my friends. Good for you. Good for you. We will see you again, bright-eyed and bushy-tailed tomorrow. And I'll have to do my hair. Get myself all gussied up for y'all folks tomorrow. Don't get your hopes up too high, by the way. I will see you guys tomorrow. Morocco, Zach, Marrakesh. Yeah, I love it. I love you guys. Thank you so much for popping in. Thank you so much for spending your time with me. Hopefully you got to learn a little bit today. If you are new and you hit the subscribe button, you're part of the 500 club now. You're part of the big 500. The people who started this out right at the beginning. In years to come, you guys are going to, or even in months to come, you're going to say, I was part of the 500, the original 500 that started this whole thing. And nothing but gratitude. Nothing but gratitude. Thank you so much for popping in and for smashing the like button. I love you guys. Thank you so much. And I will see you, literally see you tomorrow. I'll be looking you in the eye and telling you, look, I'm watching you from Marrakesh. Zach from Marrakesh. I'm looking right at you. Good work, man. Tristan, see you later, buddy. Take care, folks.